Okay. Hello students, good morning everyone. Very good, good morning everyone. Okay, so before we start the class, we should always create a positive energy, correct? Right? So before we start, we should create a positive energy. So first of all, let's clap everyone, right? So let's clap everyone with a beautiful smile on your beautiful face. Very good. Good. நல்லா சத்தமா clap பண்றேன். ஏன் இப்படி பண்ற நீ? சாப்பிட்டே இல்லையா? சாப்பிட்டியா? என்ன சாப்பிட்ட? Dosa. Very good. Okay. Fine. So my dear students, today is our first class for corporate accounting, right? Yes or no? Okay. ஏய் உனக்கு அங்கே பார்த்த மாதிரி இருக்கு. Known face. Yes. Okay. So today is our first class for corporate accounting. So everyone know that this subject comes for how many marks in the exam? 50 marks, correct? So that means you will be getting 50 marks. But if you actually see the paper of corporate accounting, you will get maximum, or you can say minimum 60 marks question will be there, which involve all the question of the corporate accounting. Maximum sir, how much sir? It goes to 65. It goes to how much sir? 65 marks question will be based on what sir? Corporate account, if you consider the odd questions also, right? So this is what the weightage, because in auditing next 50 comes in where sir? In the auditing, right? Yes or no? Right? So auditing, generally what happens, students focus on corporate accounting to get exemption, correct? So students focus that to get maximum mark in the corporate accounting, and auditing they try to get 20, 25 exemption easily can score in the corporate accounting and auditing like syllabus. So this is not very easy subject to score the marks in exam. Easily you can score 60 plus in this subject, because you have the little bit help from the audit theory part. So theory part, if you attend for 40 marks, something you will get in the theory, correct? But in the practical subject, if you write correctly, you will get total marks. So you know both the advantage now, correct? Some students will say, no sir, theory I can do theory well, practical I know little bit. So that also covered here. You would study few chapters which are format based chapter. In corporate accounting, if you see, there are few chapter like banking company, insurance company, electricity company. These are the format based chapter. If you know the format, the answers you can get easily. But there are few chapter like a share capital, accounting for shares. Then there is a chapter called cash flow statement. These are the concept based chapter. You must know the concept, then only you can write the answers, right? And one more format based chapter is a schedule 3 balance sheet, right? Whoever is working, or if you are going for training and all, you will know the nowadays the companies who is following accounting standard, they follow the schedule 3 division 1, and the company follow Ind AS, they follow division 2 schedule 3, correct? As per the schedule, right? Yes or no? I hope this you are aware of. If not, we are going to study today. Now first of all, how many of you already studied this chapter, like already study the corporate accounting? Others, anyone have? No, you don't have any idea about? Partially cover. Yes. His name is Shafi. Okay, wa? Yes, Shafi. Partially cover. Okay, sir. Kuncha right? Very good. Yes. Few basics. Okay. Cash flow motto sir engalaga theriyum. Yes or no? Very good. Okay. Do you know the format of schedule 3? Do you know the format of schedule 3? Or no, first schedule 3 start panla. Shall we start the schedule 3? Yes or no, right? So if you start the schedule 3, what will happen? You will know the basic formatting of the balance sheet and statement of profit and loss, and from there we can start with the cash flow statement. Yes or no, right? Because cash flow statement, they will give the format of balance sheet. You must know what is current liability, what is non-current liability, which are the items come under that. Yes or no, right? So shall we start with the schedule 3 first? Yes. Okay. Schedule 3 which is a financial statement. Okay, financial statement. Now, this financial statement schedule 3, this chapter comes for 14 marks in the exam. How many marks, sir? 14 marks. The sum comes now, it will generally come for 14 marks. Last attempt also they have asked the question for how many marks, sir? 14 marks they have asked in the last attempt also. Right? So you have to be very, very careful with this chapter, because this chapter is very, very easy chapter and most of the students do this chapter very well. Is that clear? Yes or no? Right? Now, what is financial statement, sir? You know very well, as an organization, we do the business for what purpose? What is the objective of doing any business? To earn profit, correct? Any business you take, no one do the business for a loss. The primary objective of any business is what sir? To earn profit. Yes or no? So how we come to know whether the business is earning profit or incurring loss? How we come to know, sir? How we come to see? First thing, we have some rule for the class. The class should be interactive, correct? Right? Jolly iruknu class. Yes, sir. You should not feel that yo class pono rombo tension and mari varakkulada, correct? Rombo jolly face le you should have the smile, correct? Right? Rombo smile iruknu face le. Work and all okay. Once you go to office, work will be there. But this time, when you come to the class now, your face and your entire attention should be in the class. Correct? Yes or no? Otherwise, what will happen, sir? Sir, we are hello. So our entire attention should be in the class and we should be happy. If you are happy now, your mind will accept whatever I teach. Correct? Your mind will be ready to accept. But if you come with the tension and all now, then what will happen? Your mind will, something will be going on your mind. Correct? So whatever I'll teach you now, it will not go 100% in your mind. Right? So that's why always come with a happy face. Right? Have a jolly mood and try to learn the concepts. Correct? During these days, what we are going to do, I will tell you which are the chapters we are going to cover. Yes, we are going to cover 100% syllabus. Don't worry about that. Second thing, we are going to solve the sums to the extent possible. First, I am saying to the extent possible, because we are going to cover all the concept here. What you need to do, once we complete the chapter, you should go home, you should solve the sums. Okay, what that you should do. Okay, my responsibility is here to what? To cover entire concept. Correct? Right? You can see 2% also nicely, jolly. Yes, sir. Are you comfortable? Because he is sitting like this now, so are you comfortable? Okay. So what I am trying to tell you, that my job, my responsibility is to teach you entire concept, make your concept clear here, and solve few sums. Right? What is your responsibility, sir? You should go home, revise the concept and solve few homework sums. Correct? Right or not? Right? So it's because yesterday I completed my financial accounting batch. Yes, so for them also I told same thing. For you people also I am telling same thing. How much number doesn't matter, how much result is matter. Correct? Right? How much you gain knowledge, that is a matter. Yes or no? Right? Okay. So my dear students, let's come to the financial statement. See, financial statement consists of now 4 items. Which are the items, sir? 4 items. Number 1, first thing is our balance sheet. What it consists, sir? Balance sheet. Number 2, what, sir? Statement of profit and loss. Number 3, what it consists, sir? Financial statement. Number 3, we call that notes to accounts. Number 4, changes in equity, and if you remove this, fifth one is nothing but cash flow statement. Fifth one is what, sir? Cash flow statement, right? So fifth one we have separate chapter itself here, cash flow statement, right? So this cash flow we are going to learn separately, right? So what we are going to learn here, we are going to learn this four part. Is it clear? Yes or no, right? So balance sheet, statement of profit and loss, notes to accounts, and change in equity. Yes, sir. What do you mean by balance sheet, sir? Balance sheet na inna, sir. What will come to the balance sheet? Assets and liabilities, sir. You know, when I was a small, right? Our beautiful teacher taught us. Correct? What taught? T format, right? Assets, liability. Yes, sir. Then capital. Less what, sir? Drawings. Add what, sir? Add what? Profit. Add additional capital. So our beautiful teacher thought that for us. But now you are not a small. You are grown up now. Right? You have come to the corporate world now. So when you come to the corporate world, what you need to do? You need to prepare the balance sheet or statement of profit and loss, not in the T format. Then which format, sir? Vertical format. Are you getting my point? So there is no more T format now. Only vertical format, in which, sir, in the company accounts. Entire company goes. The name itself says what, sir? Corporate accounting. Company or accounting. You are going to do what, sir? Company's accounting. So you must know that how company prepare the books of accounts, how company prepare the financial statement. Yes or no, right? Are you getting my point, Shafi? Yes or no, right? What is your name? Saravanan. Oh my God, Saravanan. Okay, legend Saravanan. Correct? Yeah, very good. Okay. Harish. Okay. Two name one day. Okay. Okay. So my dear students, I hope it is clear now. Right? These are the content of the financial statement. If the MCQ comes, your answer should be in this only. Is that clear? Yes or no? Okay, sir. Sir, what is the format of balance sheet? What is the format of balance sheet? My dear student, the balance sheet will start with equity and liability. Balance sheet will start with what, sir? Equity and liability. I hope you have this textbook. Yes or no, right? Okay. So anyone can tell me the page number? Page number 17. Okay. Okay. You don't have to worry about anything, just focus. Okay, no problem. Okay. Oh, just a minute, I'm just checking. Okay. Okay. So my dear student, this is the format of balance sheet. There are two division 1, division 2. Correct? Division 1 is applicable to whom, sir? The company who follow the accounting standard, and division 2 is applicable to the company who follow the Ind AS. Okay, well, now because many company who is having the branch outside India, they need to follow Ind AS and all. Correct? So few company they follow the Ind AS. For them, division 2 balance sheet is available, like applicable. But for us in the exam point, what is important, sir? Division 1. Maximum question will come from the division 1 only. Division 2 is reversing. But division 2 said, they'll say no. We start with the asset first. So division 2 asset and then liability. So I will tell you the difference also, don't worry. Let's start with, my dear student, the balance sheet format is given in the schedule 3. Correct? It is division 1 part 1 and schedule 3. So if you see that, they clearly say that the format of balance sheet given in the part 1 division 1 schedule 3. What is that, sir? Part 1 division 1 schedule 3 has given the balance sheet. This you should understand, you should remember, because in the MCQ they may ask you the questions. Okay, balance sheet is covered under what, sir? Division 1 part 1 schedule 3. Sir, statement of profit and loss, then part 2 division 1 schedule 3. Is that clear? Yes or no, right? You should keep interactive, right? Now, sir, what is the first one? Our balance sheet will start with what, sir? Equity and liability. Firstly, this is this is the format oriented chapter, okay? So please be interactive. What is the Roman number one, sir? Equity and liability. So in this case, two things they occur. One is equity, other one is a liability. Sir, equity na inna, sir. Liability na inna, sir. First, equity means owner's fund. Equity means what, sir? Owner's fund, right? Like when you was a small or beautiful teacher taught us, what he taught us, he or she, capital. Capital is the owner of a fund, correct? For here also, in the business, capital means which capital we are talking here? Share capital. Which capital, sir? Share capital. Are you getting my point? So that is the owner's share capital, reserves and surplus. They are the owner's fund, correct? Yes or no? So my dear student, first one, equity and liability. First one, what will come, sir? Shareholders fund. Roman first is capital letter. Roman 1, equity and liability. In that one, shareholders fund. In that A, share capital. In that A, what, sir? Share capital. B, reserves and surplus. C, money received, again share warrant. Stop. Sir, what is share capital, sir? Share capital are divided into two parts. Share capital divided into how many parts, sir? Two parts. One is equity share capital, other one is a preference share capital, correct? Sir, what is equity share capital? I will tell you. Equity share capital are those share capital which are not a preference share capital. Correct? So what is preference share capital then? What is preference share capital? Which are not equity share capital, correct? Very good. Yes. So what is preference share capital? Okay. Okay, preference shareholders don't have doesn't have what, sir? Voting right. Okay, next. Very good, excellent. Very good. Let's clap for her. Let's clap for her. Everyone, sattama clap pannunga. Yes. Jolly clap pannunga. Yes. Very good. So preference shareholders will have two rights. Number one, fixed rate of dividend, irrespective of profit or loss. Preference shareholders will get dividend that can be cumulative or non-cumulative preference shares. They will get a fixed rate of dividend. Whatever company on profit, they will get fixed rate of dividend. Yeah, please sir, fixed generally you might have seen like this 10% preference shares. This 10% is what, my dear student? Fixed rate of dividend. When you see 9% preference share, 12% preference share, that means they are the fixed rate of dividend. Are you getting my point? Yes or no? So two rights preference shareholders will have. Number one, fixed rate of dividend. Number one, what, my dear student? Fixed rate of dividend. And number two, at the time of winding up, when company close, that time they will get a priority to get the money. Yes or no? So how many rights preference shareholder is having, sir? Two rights. Number one, fixed rate of dividend irrespective of profit or loss. And number two, at the time of winding up, they will be paid first before payment of equity shareholders. Are you getting my point? Yes or no? So how many types of shares are there, sir? Two types of shares. Number one, equity shares, preference shares. What is equity shares? Which are not preference shares. Now what is preference shares then? Who is having two preference share right? Number one, fixed rate of dividend. Number two, at the time of winding up, they will be paid first. Then sir, preference shareholders will be paid first before payment of equity shareholders. Is that clear? I hope in between you can take the running notes. Okay, right? Fine. Sir, in the shareholders fund, we understood what is share capital, correct? Yes or no? My dear student, the share capital is there. We'll discuss in the first chapter, accounting for shares. And that time I will tell you with a logic, with your concept, okay, entire concept. I will tell you when we discuss share capital, how company do the accounting for share. Very beautiful, you should feel this beauty. how company do accounting for shares and all. When shares are forfeited, what the company do with the forfeited shares? When company issue the bonus shares, what is the impact on the share capital? These are the very good concept, and that we'll be discussing tomorrow's lecture. Okay, is that clear? So detail about the share capital will be discussed where, sir? In the next class. Okay, fine, sir. So share capital, okay, sir, we understood. What the reserves and surplus? What comes in the reserves and surplus, my dear student? Reserves and surplus appear all the reserves. Any account which end with reserves and reserves will come under reserves and surplus. Any account which end with reserve will come under where, sir? Reserves and surplus. Sir, any name, sir? Number 1. Workman compensation reserve, general reserve, capital reserve, investment fluctuation reserve. Yes or no? So you take any name which end with reserve will come under where, sir? Reserves and surplus. But my dear student, there is one name which is not end with reserve but will appear in the reserves and surplus. Which one that? Profit is a surplus. Profit is what? Surplus. Reserves, now there are two things. One is reserves. Other one is a surplus. Surplus now what, sir? Profit. Profit for the current year or profit of the last year. So it will come under the surplus. But one name is there which is not end with reserve but will appear in the reserves and surplus. What is that account? Tell me. Any idea? One name is there which is not. Yes. Any idea? No idea? No idea. Yes, Shafi. Harish. No idea? Okay. Okay, the name is, what's the name, sir? ESOP. Employee Stock Option Plan. This is the name in exam, in MCQ they may ask you. This is only the name which is not end with reserve but will appear in the reserves and surplus. We call that what's the Employee Stock Option Plan. It's called ESOP. Right? So share capital will appear two types, equity and preference. Okay? Right? And my dear students, reserves and surplus, just now we discussed, it appear all the reserves, all the accounts which end with the reserve, except one name is there which won't end with reserves, but it will appear in the reserves and surplus. So ESOP na inna, sir, don't worry, there is a separate chapter ESOP which is we'll discuss tomorrow. Don't worry about this. Okay, wow. Next one, sir. Sir, money received against share warrant na inna, sir. What do you mean by money received against share warrant? Any idea? What do you mean by money received against share warrant? Any idea? No idea? Yes. No idea. Sulra? No. Sometime what happen? Share warrant, like is one document, correct? So what happens, sometime company is having the share capital, na? The share capital sometime company convert into the warrant due to the excess of share capital. You know very well that share capital three types. One is called authorized share capital, then issued share capital and subscribed share capital. So authorized na sir, maximum share capital. Beyond that your share capital cannot go. So whenever company's share capital is going to exceed, what company do? Out of this subscribed capital, they will convert some share capital into what, to the share warrant. So that what will happen? Few share capital get released and new share capital company can issue to the public. Otherwise, what will happen? If the company want to issue new shares, they have to alter their articles of association, because this become the one of the clauses there in the AOA. If you want to change the share capital, you need to alter the clause, share capital clause in the articles of association, right? So company don't want to alter the clause. For that purpose, they will convert few shares into what, sir? Share warrant. They are also the owners only, but from the share capital, they will remove them as a share warrant. We call them as a warrant holder, share warrant holder. Is that clear? Yes or no? So how many things we discussed, my dear student, in this case? 3 things. Okay, loud and clear. First, Roman 1. Roman 1 is what, sir? Equity and liability. Roman 1 is what? In that one, shareholders fund. In that A, share capital. B, reserves and surplus. C, money received against share. Very good. Now next one, share application money pending allotment means what? What do you mean by share application money pending allotment? My dear student, when your company comes with a IPO, initial public offer, the people apply for the shares, correct? When people apply for the shares, company receive the money, correct? Like suppose, let's say Tata IPO is going to come. If the people apply for the IPO, company will receive the money. What entry company will pass? Company will say that share that is bank account debit to share application account. Yes or no? And next, my dear student, when they issue the shares, then share application account debit to share capital. This is what entry they pass. But this money is there na, till company allot the shares, till the allotment of the shares, company cannot take the money. Company cannot utilize that money. So that amount is there na, which is received by the company, they will keep in separate account called share application money pending allotment. You receive the application money, but till now you haven't allotted the shares to whom, sir? To the applicant. Until company allot the shares, up to that the amount will be where, sir? In the separate account called share application money pending allotment. And once the company allot the shares, we'll remove this amount from here and put it where, sir? In the share capital. Are you getting my point? Yes or no? So till a company issues shares, the amount will be share application money pending allotment, and once the company issued the shares, the amount will go to where, sir? In the share capital. Are you getting my point? They replace this. Is it clear? We call here bank to share application money pending allotment. Yes or no? Sorry, the amount point. The bank will go to bank only, separate bank account. But this account is there a second account where it's going to hit. Which account it will hit, sir? Share application money pending allotment. Is that clear? Yes or no? Right, boys? Are you getting my point? Yes or no? Right? And once the company issue the shares, it will go to the share capital. This is what the, sir, how many chances are there it can come in the exam? They will ask the MCQ. They will ask what, sir? MCQ. They will say ABC Limited issue the shares on so and so date and pending for allotment in schedule 3 balance sheet, where it will appear. They will give the 4 option to you. They will say share capital, then share application pending allotment, reserves and surplus, bank, something like this they will give. You should select the correct option. Correct? They have tested this question in the exam. Okay. My dear student, now come to the next one. After this, we are bifurcating our balance sheet into 2 things. One is called, there are 2 types of liability in the business. How many types of liability, sir? 2 types of. One is called non-current liability. I repeat, one is called what, sir? Non-current liability. Other is what, sir? Current liability. Yes or no? Sir, what's the difference between non-current and current? How will you bifurcate the liability into current and non-current? Any idea? What is current liability, sir? Within 12 months, more than 12 months, non-current. Okay. More than 12 months from which date to which date? Let's take an example. Suppose your accounting year is this. This is your accounting year. Okay. Your accounting year, my dear student, please try to understand here. Start on 1/4/2024. End with 31/3/2025. Now, on which date you are telling me to classify the current or and non-current? Which date will you classify? This date will you classify or this date will you classify? Right? Because we must know, we need to classify this one. Right? So, which date are you going to classify, ma? Which date? 31/3/2025. Correct? Yes or no? Or this date? 1/4/24. This is a, so this is here, this year we are going to prepare, and next year it will. Yes, but which date to which date, Andrew? How will you classify that? 12 month, 6 month, you are telling, sir, as your point, as a business point of view, which date will you consider is a 6 month, 12 month, current or non-current? You have taken for 6 months, it's become what, sir? Current. Okay. But when will you record in the books of accounts? Short term asset. Current liability. Okay, now listen, I will tell you, okay, I'll add something. My dear student, let's take example. You have taken one loan. You have taken one loan on in this date. What's the date, sir? 1/10/2024. Okay, va? You have taken the loan. Now, my dear student, this loan which you have taken now, loan is repayable. Let's say, two example I will give you. Loan is repayable on 1/8/2025. Okay. Second example I give you later, but first in this example, you tell me this is current liability or non-current liability. First thing, how will you identify this? I'll write here something different, because you will say, sir, it is less than 12 month, right? 1/12/2000. Now it is okay. Now you tell me, is it current or non-current? Yeah, this is a current year. This is the we need to find out as on this date, because we prepare the balance sheet on which date? 31/3/2025. We prepare the balance sheet date. So balance sheet date we need to classify whether this loan is a current or yes, yes. Yes, yes. If it goes beyond, okay, next financial year, I can take very good, very good answer. Yes, what he said, have you understood? No? Yes. Sir. I will tell you, listen. Current liability means, how will you identify current or non-current, or how will you classify it? Current liability means those liabilities which are expected to be settled, within the period of 12 months from the end of accounting period. When your accounting period end, after that within 12 months means what, sir? Let's take example, your period over, this is what, 31/3/2025. After this up to 12 months means what? 31/3/26. If you are going to repay within this period, if you are going to repay this loan within this period, we call that liability as which liability? Current liability. Are you getting my point or not? Yes, right. Suppose if you are repaying this liability after 12 months from the end of the accounting period, after 12 months, sir, not between this period, my dear student. Please try to understand. I am not talking about this 12 month. I am not talking about this 12 month. This 12 month become what, sir? This 12 month become what? Current. Yes or no? This 12 month is what, sir? Current. Yes or no? After this 12 month means what? After this end. If you going to repay in this period, it become what, sir? Non-current. Are you getting my point? Yes or no? Is it getting clarity? Are you getting some clarity or not? What is current? What is non-current? Yes or no, right? So current liabilities are those liabilities which are expected to be settled within the period of 12 months. Sir, nange padcho sir. What? Within 12 months or one operating cycle. One operating cycle. So inna sir, cycle, not that cycle. Operating cycle means time taken to convert your raw material into a cash. That cycle they are talking. Raw material to WIP, WIP to finished goods to debtors, debtors to again cash. So this cycle is there na. If that cycle is called what sir? Operating cycle. So they say it can be current asset or current liability. If you are expected to settle within what? 2 months, within 12 months or one operating cycle, it's a current liability only. Sorry, no slowing sir ninga ipo. It's very important, my dear students. Suppose, my dear students, suppose nalla gaunchikonga. Suppose I am going to settle my creditors. I am going to settle my creditors. Nalla gaunchikonga. Suppose my operating cycle is, let's say, 9 months, and settle, I am going to settle in 12 months. Now these creditors, current or non-current? Tell me fast. These creditors are current or non-current? Current or non-current? Current. Why sir? 12 months or one operating cycle. In between that only you are settling. Suppose, Shafi, focus pan. Suppose, my dear students, my creditors, the operating cycle, let's say 14 months. How many months, sir? My operating cycle is 14 months and I am settling in the 13 month. Current or non-current? No. It becomes what, sir? Current. Because you are settling within your operating cycle. But this schedule is very clear. When you bifurcate na, it has to within 12 months or one operating. Within that, you have to settle the liability. Apply the current. If it crosses that, crosses what, sir? Your operating cycle or 12 months. If it crosses that, then it will become what, sir? Non-current. Yes. No time frame. Company to companies differ. 12 months is fixed. Yes. See, in exam they will give you operating cycle. Don't worry. They will say the company's operating cycle is 12 months, 13 months, 14. They will give. So based on that, you should see when you are settling your creditors. Are you getting my point or no? Suppose my operating cycle is 13 months. We are settling our creditors in the 14 month. Now it become non-current. Yes or no? Boys, are you getting my point? Girls, yes or no? Right? Yes. Okay. This batch is total ulta. Last batch we are having girls like numbers more. This batch boys quantities numbers are more. Yes, Shafi, correct na? Yes. Okay. So okay, is that clear? Are you able to understand how to identify current or non-current? Yes or no? So current na plain definition is what, sir? Which are expected to be settled within the period of 12 months from the end of accounting period. Non-current na after 12 months from the end of the accounting period. But if you go second criteria of the definition, they say or one operating cycle. This 12 month or one operating cycle, within that it is there, it become current. After that it become what, sir? Non-current. Is it clear? Yes or no? Sir, if you see, sir, any example is there, I can show you, don't worry. My dear students, there is one example, current and non-current. Now, please come here. Now, illustration number 2 is very beautiful illustration, my dear student. Now, you should tell me whether it's a current or non-current. Yes or no, right? Okay. My dear student, they said amount is how much, my dear student? Amount due 3,10,000. Due date is how much, sir? What's the due date? Due date na? In that you are going to settle the amount. To be settled. To be settled. Actual settlement. Operating cycle of the company is how much, sir? 15 month. So 12 month or one operating cycle. Within that is a current. After it becomes what, sir? Non-current. So now tell me one by one, what is the example for first case? Current or non-current? First, operating cycle how many months, sir? 15 month. Right? Tell me fast. So first one is what? Current or non-current? If you see the due date of the settlement 18/5, due from which date? This date. Cut off based on the operating cycle. Operating cycle how many months, sir? 15 months. 15 months from which date to which date, sir? 22 here. Due from which date to which date? 20, not 2022. Right? Okay. So in that how many months, sir? 15 months. At the 15 month you will get this one. Within this, how they paid? This is a settlement, actual settlement. Compare this date with this date. Correct? So before the, what is the actual settlement date, sir? 18/5. But it is coming on 1/7. So what happened? Before they paid, it become what, sir? Current. If suppose if they pay here 18/8, up it become what, sir? Non-current. Cross the, I told you within 12 month or operating cycle. Here 12 month become irrelevant now. Yeah, sir, because operating cycle more than what, sir? 12 months. So 15 month only we should consider. Shafi, purde illeda? Yes or no? Are you getting my point? So this date, within this date you are going to pay, settle na current. After that day, non-current. Correct? You can take another example. This 1/6. What is the operating cycle? 15. At 15 month. How many? What is the date will come? You will get this date. Correct? 1/9. 1/9. When you are going to pay? Oh, 15/9. It become what? Non-current. Non-current. Before 1/9 it will become current. After that, is it clear? Yes or no? 12 month. Correct. Right? Which one is higher you should consider? Because that is a condition they said. 12 month or one operating cycle. 12 month or one operating cycle. Operating cycle is 9 month only. Then operating cycle become irrelevant for you. Then what criteria will be relevant for you? That 12 month criteria. If the operating cycle is more than 12 month, after operating cycle is important for you to consider current or non-current. Is it clear? Yes, any doubt? No doubt? Is it clear? Other things I hope you can do it. Correct? A current or non-current based on this category. Is it clear to everyone? Yes or no? Shall I proceed next one? Yes or no? Okay, sir. So my dear students, what we have discussed now, that what's the difference between current liability and non-current liability, how to classify that, right? So any liability we are going to settle or expected to be settled within a period of 12 months or one operating cycle, we call as what, sir? Current. Beyond that, it becomes what, sir? Non-current. Is it clear? Yes or no? If you have any doubt, you can ask me. Otherwise, I can proceed further. Is it clear up to this to everyone? Yes or no? Right? Yes? Okay. Let's come to the next one. So, in non-current liability, there are 4 items. In non-current liability, how many items are there, sir? 4 items. Which are the 4 items? Number 1, long-term borrowings. Long-term borrowings. Number 2, deferred tax liability. What is number 2? Deferred tax liability. Number 3, other long-term liability. And last one, long-term provision. Yes or no? I repeat again. In case of non-current liability, how many items come, sir? 4 items come. Which are the 4 items? Loud and clear. Number 1, yes, sir. What will come to long-term borrowing? In the long-term borrowing, 5 items comes. How many items come, sir? 5 items. Number 1, debentures, bonds, public deposit, term loan, other loans and advances. How many item comes, sir? 5 item. Number 1. What is number 1, sir? Debentures, bonds, not a James Bonds and all. Yaru, sir? James Bond theriyuma? You know, appudu correct illa that. You see the movie or not? James Bond movie. Ipo paakliya? Ayyo. Okay, you see? No. Okay, very good. Shafi, just correct illa. What is the last movie? Okay, I saw last movie. No Time to Die, and he will die. The movie name itself, what, sir? No Time to Die, and he will die. Then I thought, why the name of this movie No Time to Die? Correct. Okay, anyway. So how many items will come, sir? 5 items. Which are the 5 items? Number 1, debentures, bonds, public deposit, term loan, other loans and advances. So loud and clear, how many items will come? 5 items will come. Number 1, debentures, bonds, public deposit, term loan, other loans and advances. It is clear. Is it clear? Okay, sir. Nalla purida, sir. So debentures na inna, this is the long term debt instrument issued by the company to raise the fund, right? Bonds also same thing. Public deposit also. Public deposit na inna, sir. Sometime company accept the deposit from the public, so there's a liability for the company, correct? Thereafter what, sir? Loans and advances. Some loans and advances, if the company receive the loan or advances from whom, sir? From their third party, or we can say that their subsidy. From their subsidiary, if you are getting some loans, it's a liability for the company, correct? Right? So that will come to loans and advances. Yes or no? Again, what will come in loans and advances, sir? For example, we have one building and we let out that building. We got some advance. We get some advance, correct? That advance the current liability or non-current liability for us? Non-current. Why, sir? We will repay that liability not today, after 2 years, after 3 years. That's why the advance rental advance which we received, it is a liability for us and it will come under the long-term borrowing. Is it clear? Yes or no? Next, my dear student, other loans and advances, you know very well. Come to the next one, deferred tax liability. Will be discussing later, last. Okay. For the corporate account, for the financial accounting student, yesterday we have discussed what is deferred tax asset, what is deferred tax liability. Yes or no? Accounting standard 22, accounting for taxes. Okay, my dear student, next one, other long-term liability and long-term provision. Now, what is long-term provision, sir? Long-term provision na inna any provision which are expected to be settled after 12 months from the end of the accounting period or one operating cycle. Then what is the difference between provision and reserve, sir? Correct? What is the difference between provision and reserve, sir? Reserve is a, okay, anyone can explain what is the difference between provision and reserve? Fast.
Reserves is purely mentioned advance.
Okay. Okay, so reserve is created out of what? Reserves is created out of what? From what you create a reserve? How reserves are created? How we give the birth to reserve? From where? What is the source of reserves? From where the reserves come into business? From the profit, correct? So if you have the profit, you transfer some amount to the reserves, correct? Right? So from the profit, we transfer some amount to the reserve and it will be used in the future if required, correct? You know our best example of the reserves, you know what? Our mom. They know how to save the money. If you give them, let's say for household expenses, give them 10,000, they will not spend 10,000. They will spend only 7,000 and 3,000 they will keep in their pocket. And when, you know, in the COVID time, we might have seen that the most of the home run by the mom only that time, because their saving they have given. I generally tell to my students that when I was a small and when I need money, you know, the mom used to keep the money in all small boxes. Dabbas will be there in home, right? Sugar box, okay, the tea powder box. Everywhere somewhere or in a rack there is a sardis. In that they will keep the money and all. Correct? So all you go anywhere. I belongs to village. So if you are from the village, you can able to link what I am trying to say. Yes or no? So mom will always, you open any box, there will be money. It will be either change, 5 rupees, 10 rupees or one note. You will find. Today also if you go to village and all, this is the situation. Generally village people and all, they will not keep the money in the bank and all. They believe money keeping in the home. Correct? Now also GPay and all. For my parents, he don't know GPay and all. He don't know how to do the GPay and all. Really, I'm telling. Right? The village, people really don't know. So that's why they always keep the money with themselves only. And they will have what? 10,000, 15,000 only they will have. Correct? Right? So that time, mom know how to save the money. Reserve this concept. I feel that reserve this concept has come from the moms only. The concept has derived from the moms of India. That's what I feel. Because they know how to save the money. We people don't know how to save the money. We only know how to spend the money. Correct? We believe on spending, not saving the money. So, I can prove that. You get 10,000 rupees salary. The day when you get a 10,000 salary, you will say, Macha. Correct? The first call will go, salary vandachida. Right? One day it will be very jolly. Next day, no one will pick up the phone and all. Correct time. Because we won't feel to save it. We always believe on spending it. Correct? Right? Always save the salary. Always save the money, which is very important for the future, my dear students. Start investing the money. Start investing somewhere. Create your SIP. Always, I tell to my student that we born in the middle class family. We born in the lower class family. But when we die, we should not die in the middle class family. We should create something in the life. In this life, something we must create. And people must recognize us. Whether people recognize us or not, at least our family should recognize us. Correct? Right? Yes or no? So if our family at least recognize that we earn a lot, that at least we should do. But are you getting my point? Start saving the money. If you are going on employment, save some money. Save monthly 2,000. Something you invest. Investment is very important for middle class people. We all belongs to middle class or lower class. Always save the money, invest the money. It's very important for our future. For today's small scale investment, you can generate, a big plant, big investment you can create. Yes or no? Right? Anyway, so come to the next one, my dear student. So what is the next one? So long-term provision, I discussed with you. What is the reserve we have discussed? What is the provision then? What is the provision? Provision we create today expecting that we are going to incur some loss in the future. See, there are two accounting concepts. One is accrual concept, other one is what? Prudence concept. Yes or no? In accrual concept, what it says that any item of income or expense for the period should be recorded that period only. Accrual say. But provision we won't record as per the accrual concept. We record as per the prudence concept. Prudence say, if you feel that future you are going to incur some loss, you create some provision for that today only. You create some provision for that loss today so that your going concern will be protected in the future. Otherwise, your going concern will kill your business. And that's why we create a provision. So provision is the amount which is also set aside from the profit only, which are expected to be settled in the future. But provision we know, we are expecting that. Are you getting my point? Yes or no? Provision is what, sir? Which we expect, which may happen in the future. To avoid that, we create some provision. Is it clear? Yes or no? Right? Hey, purdi illada. Nama jolly irukka illa. Nama bore adikida. Sulu. Are you able to understand? Yes. Inama. Yes. Okay. Next come to the, sir, what will come to other long-term liability? Other long-term liability. Sir, whichever not come under these three categories, I will come under the other long-term liability. Yes or no? That can be any liability. So, in example, creditors, trade payable. Trade payable includes two things, sir. Creditors and bills payable. Creditor plus bills payable is equal to what, sir? Trade payable, my dear student. If you are going to make the payment after 12 months or after one operating cycle, that creditors will not a current liability. That creditors are what? Non-current liability. Are you getting my point? And that's why it will appear not in the current liability section. It will appear in what, sir? Other long-term liabilities. Are you getting my point? Yes or no? Right? Okay, sir. Idanella purida, sir. I hope all these 4 points you understood. Correct? So, non-current liability. Non-current liability. What will come, sir? 4 things. All the things must register in your mind. Correct? What is number 1 in that, sir? A. Long-term borrowing. B. Tax liability. C. And D. Yes or no? Sir, okay, sir. Idanella purida, sir. Current liability. Sir, what is current liability? Just now we discussed. Are those liability which are expected to be settled within 12 months or one operating cycle? That is a current liability. In that, sir, this is long term, na? This will become long term, short term. Sir, short term, what will come, sir? What will come to short term borrowing, sir? Number 1. Credit card payment. Very good. Credit card, which is okay. First one, bank overdraft. Bank overdraft. Bank OD is what, sir? Long term or short term or current? Current. Why, sir? Bank will give you the excess facility to withdraw the money. But the moment check comes to your bank, bank will reduce your bank balance or reduce the OD balance. Correct? Are you getting my point? So, bank overdraft, cash credit or loan repayable on demand. Loan repayable on demand. Repayable on demand, nahi na, sir. Whenever that person asks the money, you need to pay that. It is called repayable on demand. When he demanded, you need to repay that money. It is also part of what, sir? Current liability. Are you getting my point? Yes or no? Shafi Purda illada? Yes or no? Right? Okay, sir. Next, my dear student, trade payable. Just now we discussed trade payable, which include what, sir? Creditors and bills payable. Correct? Okay, sir. Next one, other current liability will come to later. Short term provision. Short term provision. Short term provision consists of 4 types of provision. Number 1, provision for tax. Provision for tax. Provision for expenses. Number 1, provision for tax. Provision for expenses. Provision for employee benefit and other provision. I repeat, how many types of provisions are there, sir? 4 types. So, provision, short term provision includes 4 types of provision. Number 1, provision for tax, provision for expenses, provision for employee benefit, other provisions. Are you getting my point? Yes, this all will come under where, sir? Short term provision. Sir, provision for tax na inna, sir. My dear student, every year we need to pay a tax to government. So for that we need to make the provision. So it is not a long term provision, my dear student. It is a what, sir? Short term provision. But every year we need to pay the tax to government. Yes or no? Second is what, sir? Provision for expenses or provision for employee benefit. So employee benefit na inna, sir. Employee benefit means salary to the employee. You know, entertainment expense to the employee. What? Provident fund. Then there is a other scheme called gratuity. But I am not talking about that. I am talking expenses. You are making some provision for the employee, for the expenses, refreshment expenses. What do you mean refreshment expenses? Yes, Harish will tell. Harish, Sulupa. You refresh or not? You tell me first. In the break time, right? In office. Yes, see. Sir is telling, yes, you refresh. Yeah. Correct, correct. Lunch purpose. Yes, yes. Very good. Very good, sir. Is telling correctly. Okay. Okay. Very good, sir. Okay. Yes, boys. Are you getting my point? Yes. So, what I'm trying to say, refreshment. Once you go to employment, you will know they are in employment at present. So that's why I'm able to understand what they are trying to say. Okay. You will not understand that. For that, you need to grow a little bit. Okay. Oh, now, yeah, correct. Now you are a student. Yes. Now he is student. Yes, very good. That feeling should be there. That is very important. Correct. That feeling is very important. That at present I am a student, right? Very good. You know, Shafi. Uh, yes. So entertainment expenses or refreshment expenses for the employee, to the employee will come under where, sir? In the provision. They made some time expenses. They made some provision for the next year purpose. Next year they have to incur same expenses na. For that they will make the provision in the current year. Is it clear? Other expenses na inna, sir. Other provision na inna. What will come in other provision? Any idea? Medical provision for medical expense for employee na, it will come in the, yes, employees benefit only. Yes, Shafi, Sulupa. That is over now. Other expenses also. Provision for other expenses. Means what? Provision for other expenses now what? What will come in that? Damages. What damages? Sure. Any idea? No idea? I'll tell you. See, in office, we do some puja and all. Puja? Yes or no? Right, sir? You will go to temple or not? For what? For what you go to temple? Tell me fast. To get blessing from the God. Correct, Ilya? You do some puja and all. Right? Yes, sir. You know, Shafi? Prasadam, yes. Pongal, yes. Especially that Pongal will be very nice. Correct, na, if you go to temple and all. Ni pova Ilya ma. Yes. Okay. Any place, any God place. Okay. What I'm trying to say, expenses for the puja expenses, expenses to sweeper who clean the office and all. For those, they are not an employee generally. They are paid like monthly. We pay something to them. So that will come under the other expenses. Provision for other expenses. Is it clear to you, everyone? Yes or no? So I hope that these four things also clears to everyone. Yes or no? Sir, now one thing is left, sir. Other current liability. Other current liability means other than these three things. Okay, so the puri the englaka. Example what? Anyone can give me the example of other current liability? Rent. Rent is a liability for you or expense for you? Expense. So it will not come. Next. Expenses outstanding or expenses payable. It will come under where, sir? Other current liability. For example, I can tell you. Rent. Rent you are paying what, sir? Every month rent. Suppose current month rent you will be paying the next month. Correct, Ilya? Same thing in the business also. In the business also, what we will be doing, sir? You will be paying the rent or the salary to the employee for the month of March in the month of April. So you are paying 1 month later, na? Or 2 days later. So end of the year, you need to record what? The expense for that year only. So that 1 month expense, 1 month salary is what, sir? Have you paid it? No, it's outstanding. So that outstanding expense will come under where, sir? It will come under the other current liability. Any outstanding expenses will come under other current liability. Sorry, the okay, sir. Any other example, sir? Any other example, sir? Other example is what income received in advance. You receive some income in advance. Is it your income? No. It's the income of which year, sir? Next year. But you receive in advance. So it will come under where, sir? Again, other current liability. Are you able to understand? Yes or no? Right? Sir, one more doubt I have. So dividend payable will come under where, sir? Again, it will come under the other current liability. Is it clear? Yes, sir. These are the example of other current liability, my dear students. So I hope equity and liability part we completed. Yes or no? Up to this, are you able to understand? Please tell me. First of all, we revise everything till now what we discussed. Number one, my dear student, equity and liability. In that one, shareholders fund. In that A, share capital. B, reserves and surplus. C, again share war. Number two, share application money pending allotment. Number three, non-current liability. Number four, current liability. In non-current liability 4 item, current liability 4 item. Correct? Here long term, short term. Then deferred tax liability, here trade payable. Then the long term provision, short term provision. And there is what, sir? Other liability here, other current item. That's it. Is it clear? Very easy to remember. Yes or no? Right, boys and girls, are you able to understand? Yes or no? Yes? Okay. After the completion of the schedule 3 now, you will see the exam sums. It is very easy. Very easy. Okay, come to the next one, asset. We classify the asset into two category. One is called non-current asset and second what, sir? Current asset. Again same thing. So what is asset, sir? What is asset? Asset means which belongs to the business, which owned by the business. We call what, sir? Asset. Then there is a two types of asset, that is non-current and current. Current asset now what, sir? Current asset are those assets which are expected to be realized within a period of 12 months or one operating cycle. You are expecting that you are going to receive that. Asset and number kita varnoda. Adda asset. Liability and other number pay pannu. We have to pay that. It will become what, sir? Liability. Are you able to understand? Yes or no? So if asset na, current asset na, whenever we are going to receive or expected to be received within the period of 12 months or one operating cycle, we call as what, sir? Current asset. What about the non-current assets, sir? After 12 months. But there is a fixed asset. What do you mean by fixed asset? What do you mean by tangible asset? Because the non-current asset are two types. One is PPE and intangible asset. PPE and what, sir? PPE deal with AS 10. Intangible asset deal with AS 26. Okay. So now what is property, plant and equipment? What do you mean by fixed asset? Fixed assets are what? How you classify fixed asset or not? Not example. I do not example. What do you mean by fixed asset? Huh? Yes, fixed assets are those assets which are expected to generate some benefit to the enterprise. There is an economic outflow. You have paid the money, but you are expected to generate the benefit over a period of time, which gives the benefit to the enterprise. For example, my dear student, this calculator is there. Yes, I am a manufacturer of this calculator. To manufacture this calculator, I need what, sir? Machine. So the machine is my fixed asset. But what about this plastic and all, sir? That is not my fixed asset. That is my raw material. Are you getting my point? That means fixed assets are those assets which help to generate the revenue for the business. Correct, Ilya? Yes or no? That means you make the asset, you make the what product by using that fixed asset. Good, Ilya? Yes or no? Right? Now, next one, my dear student, in that PP, what is PP? Property, plant, equipment, and what's, sir? Intangible. You know what is property, plant, and equipment? Yes or no? Right? AS10 will tell what is property, plant, and equipment. These are the tangible assets. These are what, sir? Tangible asset held for the use of production, supply of goods or services, production purpose or manufacturing purpose, rental purpose or administrative purpose, and expected to be used more than 12 months. That we call as a PPE. Next one, intangible asset. Intangible asset na inna, sir, which you cannot see, which you cannot touch, but you can feel it. It become what, sir? Intangible asset. What is that intangible asset? Anyone can tell me the example? Example of intangible asset. Goodwill. So now చిన్న వయసులో ఎంత పడిచిడు goodwill. Yes or no, right? Right? Okay. And here's a practical life example. Practical. Trade value. Patent. Okay. You said me business, not business. Real life example. Number life lay. What is intangible asset? You are having, which a person cannot see, cannot touch, but you can feel that. The real example. Legacy. Legacy. Okay. There is a goodwill. For the individual legacy of the person on the basis of what? Individuality you are talking. Okay. Yes, sir. Trust. When one person have a trust on other person, we cannot see that, we cannot touch that, but we can feel that. Correct? When you call and you speak with him, so you'll feel that this person having a trust with you. Correct? Second thing, you know what? The love, the mom or parents' love towards their children. You cannot see that, you cannot touch that, but you can feel that. Ina Shafi, correct illada? Yes or no? Inada? Others' love I am not talking. The parents' love to their children's, correct? Right? So that is intangible asset that no one can value also. Can you value your parents' love toward you? Can you value that, sir? My parents love 1 kg. Or 10 kg. Can you value that? No. Because it's a self-generated. They are generated their own love toward their children, and that's why self-generated asset or goodwill cannot be recorded in the books of account because it does not measure in terms of money, and that's our parents' love cannot be measured in terms of money. நீ என்ன காசு கொடுத்தாலே சரி, நீ அதை லவ் இருக்குன்னா அதை மணியில் மெஷர் பண்ண முடியாது. புரியுதா இல்லையா? Are you getting my point? Yes or no? And that's why, my dear students, self-generated asset we never ever record in the books of account goodwill like this. Okay. Sir, what is capital work in progress and intangible asset under development? What do you mean by capital work in progress? Yes. Any idea? What do you mean by capital work in progress? Construction of building. Yes. When building under construction, it will not go to the PP. It will be under capital work in progress, and the building, once construction is completed, it will remove from here, it will go to where, sir? PP. Are you getting my point? Yes or no? So what is the next one? Intangible asset under development. Oh, what is this, sir? Intangible asset under development. Right? Many doctors, in the COVID vaccine and all, when they started finding the formula for COVID vaccine, that time they have spending the money, na? Yes or no? When the vaccine is, that formula is ready, that time they will say intangible asset under what, sir? Development. And once the formula launched in the market, it will come under where, sir? They will take the patent, they will take the copyright on that. It becomes their intangible asset. Because have you seen the Dolo 650 formula? Pati illada? How they make the Dolo 650? What is the ingredient? Ingredient will be mentioned in where, in that medicine. What formula? You don't know, correct? I also don't know. Tablet. Okay. We don't know what, sir? How they invented that Dolo 650 or paracetamol. Yes or no? Again, one tablet is there. Okay, leave it. This is not a medical class. Okay, accounts class. Right? Again, one is there. What is that? Dolo 650. Citrazine, paracetamol, all this. These are the common man known, correct? Medicine. Okay. Shafi, are you getting my point or not? Yes. I hope till you get ready the intangible asset, it will be in intangible asset under development. Once the intangible asset ready, it will go to the where, sir? Where it will go? Intangible asset. Is it clear? So I hope that first A point is completed. Non-current asset, what is first one, sir? PPE and intangibles. What is the first point, sir? PPE and intangible. In that, how many items will come, sir? 4 items. Number one. What is the number one? Property, plant, equipment, intangible asset, capital work in progress, intangible asset under development. Yes, okay, sir. Come to next one, non-current investment, and here is a current investment. Link this. What is non-current investment? What is current investment, sir? Non-current investment means are those investment when you purchase, your intention is very clear that I am not going to sell that investment for next 20 years, next 10 years, next 5 years. Our AS 13 is very clever and very clear about the accounting for investment. AS 13 said usually account the investment as a current or non-current based on the intention of the management. When you purchase the investment, that date, what is the intention of the management to hold the investment for 12 months or more than 12 months? At the date when, sir, when you purchase it. If the intention of the management is to hold those investment up to 12 months, we classify that investment as a current investment. And if the intention of the management, my dear student, is to hold those investment more than 12 months, it goes to where, my dear student? Non-current. That means what is main point? Intention of the management, that I am not telling. AS 13 is telling. When you read the AS 13, accounting for investment, you will know that. In that, you will understand. Are you getting my point? Yes or no? Chumma, we cannot say, okay, I feel today current, tomorrow I feel non-current. No. As many people who is trading in the share market, they purchase the shares, only for intraday. And when they start incurring the loss, okay, tomorrow we'll sell. Correct? That means the intention of the person is getting changed. But you should not classify your investment based on that. The moment you purchase, what is your intention? To hold for 1 year, current. To hold more than 1 year, non-current. Intention should be very clear. Are you getting my point? Yes or no? Where it is given, sir? In the accounting standard 13, it is clear. So I hope it is non-current investment. Sir, investment na inna, sir. Suppose if I am a business, I am an individual now, I invested the money in, let's say, Reliance Industry or TCS or Wipro. I invested in those company. So that is what for me, sir? Investment. Now is it a current or non-current? What is my intention at the time of purchase? If my intention is to hold for 12 months, current. More than 12 months, non-current. Is it clear? Because when you go to the business, when you go to the employment and all, that means it is very important for you to classify the investment current or non-current. That means you need to ask the management, what is your intention? You have to ask, because you are a professional. You should ask to management, hey management, what is your intention about this investment? Current or non-current? Your intention is to hold for short-term purpose, like 12 months or more than 12 months. It will be classification will happen. Is it clear? Okay. Deferred tax asset will be discussed later. Then there is a long-term loans and advances, and what's, sir? Other non-current asset. What is long-term loans and advances, sir? Here also some loans and advances over there. Where, sir? In this long-term borrowing, other loans and advances. Correct? Here also one separate heading is there. Other. There is that other long-term loans and advance. What is the meaning of this, sir? Either namlaka asset. This is what, sir? For us, asset. So if it's the asset for us, it means what, sir? We have given loan to others. Oh, listen. Suppose now nalla gaun chikonga. If I invest the money in some other subsidiary, my subsidiary company is there. In that subsidiary company, I am giving some investment. That will come under the investment category, not as a loan category. Are you able to understand? Loans and advances as a business. You are giving some advances to whom, sir? Loans as advance you are giving to whom, sir? To the landlord, to the house owner. It will come under us, sir. For us, it is the asset. Electricity department, we pay some advance at the time of taking the electricity in our home. That is also what, sir? Loans and we are given them advance to them. Loan given to third party, to the related party. We are given some loan to a related party. That is also come under where, sir? Loans and advances. But it should be which terms are long term in nature. Is it clear? Yes or no? Are you able to understand? Next, my dear student, other non-current asset. Other non-current asset na inna sir. Other than this category, anything comes now, it will come under the other non-current asset. Okay, wow. Next, my dear student, current asset. What is the current asset will come, sir? What will be the current asset? First, current investment I discuss with you. Inventory. Inventory consists of 3 items. How many items, sir? 3 items. Which are the 3 items? Number 1, raw material, WIP, finished goods. For the manufacturer, all the 3 things will come. For the manufacturer, all the 3 things will come. For the trader, only one thing will come. That is called finished goods. Correct, sir? Okay, sir. Trade receivable is nothing but which includes what, sir? Debtors and what, sir? Bills receivable. You add these two, you will get what, sir? Trade receivable. Cash and cash equivalent means what, sir? Cash in hand, cash at bank. Yes or no? Right? Then checks also is called as a cash only. Next, short-term loans and advances. Again, one more thing you write down. One thing is missing here. That is DF, other current asset. One more thing, please add in your textbook. It is missing. It's one more thing. It has to be there. F, other current asset. One more thing, please add in your textbook. Other current asset. Please change in your textbook. Okay, because they have not mentioned there, which is not correct. You have to make the changes in the textbook, my dear student. It should be other current asset. Is it clear? Yes or no? So, other current asset, what will come, sir? What will come to other current asset, my dear students? Any idea? Income receivable, income accrued. Yes or no? Then what will come? Expenses paid in advance. You paid the expenses in advance. What is that for us, sir? That is then asset for us. Our income is there. That income we yet to receive, my dear student. What is that for us? Asset. Are you getting my point? Yes or no? Right? So like this it will come here, my dear students. Short-term loans and advances. Any loans which are you are expected to receive within a period of 12 months, it will come under short-term loans and advances. In exam, generally, what will appear, sir, out of this balance sheet? First of all, we revise the balance sheet. We by heart this balance sheet. Then we go to statement of P&L, and I will tell you what will come in the exam, where you should focus more in this all, because everything is not important. They will not ask everything in all the categories, correct? Something only there which they ask in the exam. Is that clear? Yes or no? But you must know the balance sheet format completely. Is that clear? So what's first one? Now everyone should say together. Okay, wa? Yes. So ready? 1, 2, 3, start. Roman 1. Under that 1. Under that A, B, C. Number 2, share application money pending allot. 3, non-current liability. 4, current liability. In non-current liability, A, B, C, D. A, long-term borrowing. B, C, other long-term liability, and D, long-term provision. Come to next one, current liability. In that, A, short-term provision, short-term borrowing. B, C, D, short-term. Okay. Long-term borrowing, how many items come, sir? 5 items. Which are the 5 items? Long-term borrowing. Number 1, debentures, bonds, public deposit, term loans, other loans and advances. Correct? Yes. I hope it is clear, my dear students. Asset. Now asset, we bifurcate the asset into 2, non-current and current. In non-current, A, what will come, sir? PP and intangible asset. In that, 1, 2, 3, 4. 1, property, plant and equipment. 2, intangible asset. 3, then C, 4. Very good. Then B, what will come, sir? Non-current investment. C, deferred tax asset. D, term advances. And E, other. Okay. Current asset. In that A, B, C, D, what will come, sir? current investment, trade receivable, cash and cash equivalent, and inventories, correct? And what, sir? Inventory. Sir, can we change this order, sir? Yes, you can change this order, not an issue. But generally write down current investment, inventory, trade receivable, cash and cash equivalent, and other current asset. Sir, what will come in the exam is very important. Generally in the exam, out of this, what comes, sir? Share capital, reserves and surplus. Generally, it 100% comes. Money received against share warrant. This money received against share warrant. This, it won't come. Share application pending allotment, no. Idu kuda exam le they won't ask generally. What will come, sir? Non-current liability. In that, what will be there, sir? Long-term borrowing and other long-term liability. That's it. You won't get this one also. Which one, sir? This deferred tax and this long-term. This won't be there in the exam. Generally, too, they won't ask. Okay, number cake la, correct? We don't know, but generally till now, whatever sums I have seen, it is not there. Next, my dear student, current asset, current current liability, you must know everything. Current liability, you must know everything, one item can come. Assets, sir. Asset, generally we have seen these two things, PPE and intangible asset. Capital work in progress, intangible asset development, very rarely it may come, very rare. Investment will be there, and this won't be there generally. Current asset, current investment will be there, inventory, receivable, cash and cash equivalent. Short-term loans and advance, very rare. Other current asset will come. Okay, this is very rare. So how much item will come here, sir? 5 items. That's it. Is it clear? Yes or no? Right? Okay. My dear students, I hope with this you are what completed, sir. The balance sheet format is completed. Now we are moving to which format, sir? We are going to the next format called Schedule 3, Division 1, Part 2. Okay. Once you studied this, that's it then. Okay. Now please focus. This is very important. First one will come what, sir? Revenue from operation. What is the first one now? Revenue from operation. Whatever. Page number. Break, huh? What's the time now? 11. So you want break now? Huh? The habitual item, correct? Right? Very good, man. No, in the FA class, 11 o'clock is our break time generally. So she got habitual. Last 6 days, 11 o'clock I am giving them break. So she got habitual now. Ma, correct, Dana? So Khandiva break venu ma? Okay, 15 minutes break venu? Yes? Very good, Rashafi. For una kagada. Okay, I am going to give this break. Okay, take the 15 minutes break. After the break, we are going to resume. After the break, what we are going to do, we will complete this and we will solve the sum. You will see your confidence. You will say, yeah, we can do it. Is that clear? So take a 15 minutes break. After the 15 minutes, we are going to resume again. Thank you so much, my dear student. Okay. So welcome back to class. Once again after the break. So my dear students, now we are going to discuss about the part 2, division 1, schedule 3, statement of profit and loss. Correct? Yes or no? Okay. So my dear students, now the format of statement of profit and loss. First thing, what is, sir? What is the first one? Revenue from operation. What is the first one? Revenue from operation. So if you see, what is the page number? Can you tell me? 155. Oh my God, 155. Okay. Okay. So this is the format of statement of profit and loss. First one, my dear student, revenue from operation. So revenue from operation. Means what? What do you mean by revenue from operation? Your principal revenue generating activity. How much you earn from your main business activity, it will come where, sir? In the revenue from operation. Let's take example. My dear student, if you are taking or if you are doing the cloth business, you are doing which business, sir? Cloth business. So in the cloth business, what is your main revenue, sir? Sale of cloth. Are you getting my point or not? So sale of cloth is what, sir? The main business activity. Yes. Or sir, suppose, let's try to understand. Tarun is there, correct? Yes. Tarun is doing the business of, let's say, a furniture. He is buying the furniture and selling the furniture. So what is the revenue from operation for you? Selling the furniture. Now Tarun is, he is having one property. Where, sir? In the Anna Nagar. In Anna Nagar, he is having one property. And that property have let out for a monthly rent of 1 lakh rupees. He is getting every month 1 lakh rupees. Will that 1 lakh as a rent will appear in the income from operation, revenue from operation, or will it appear in the other income? Where it will appear? Where it will appear? Is it a revenue from operation or other income for you, Tarun? Tell me. Selling, not, he is not selling. He is getting rent received, other income, correct? Yes or no? So it is called, that means other than your main business. If you generate anything, if you receive any other income other than main business, will come under where, sir? Other income. Like we invested the money, right? We saw in the balance sheet non-current investment, current investment, yes or no? You invested the money in shares and from that you receive the dividend, right? So dividend received will come under which activity? Which will come under where, sir? Will it be revenue from operation or other income? Other income, because his main business is what, sir? Buying and selling of furniture. Are you getting my point? Yes or no? Is it clear to you, everyone? So what business you are doing, from that you are generating some revenue, we call as a revenue from operation. Other than your main business, whatever you received, whatever you generate, it will come under where, sir? Other income. Are you able to understand, boys and girls? Purida illada? Yes or no? Sir, any other example, sir? Interest received. Interest received. You receive the interest, will come under where, sir? Where it will come? Will it come under revenue from operation or other income? Other income. Are you getting my point? Yes or no? Sir, if there is a profit on sale of asset, right? If there is a profit on sale of asset, where it will come? Will it be part of revenue from operation or other income? Profit on sale of asset, fixed asset, will it come in the revenue from operation or other income? Other income. Are you able to understand? So always remember, as in schedule 3 part 2 division 1, what will appear, sir? Here revenue from operation means your principal revenue generating activity, your main business activity. From the main business activity, what you generated will come under what, sir? Revenue from operation. Like Mega Mart. Have you seen the Mega Mart and all? Mega Mart pathing le liya. Pantaloon shop. Yes, how you know? Have you went inside? Why? Very good. What about you? Pantaloon pone illa. Pantaloon shop. Only well in the path. Ulla pone illa. No. Ni poliyama. It's only for girls only. Yes. What about you? Then you will go to, sir. Then that is not my cup of tea, sir. I need only branded and all that. What's, sir? Pantaloon and all. Correct, sir? Right? We need only branded, right? Correct, ma? Very good, ma. Very good. Okay. So if you go to pantaloon shop, Saravana stores. Adan namala theorem, right? Yes or no? Sarono stores. In that, if you go, you will see the different segment. Na? What is the main business, sir? Cloth or groceries or jewelry section? Yes or no? So whatever they generated from that, it will appear in the revenue from operation. Correct, right? See, Tarun's Brainery, where we are classes is conducted now. What is the main source of income for our institute is what, collection of fees. That's it. Yes or no? So what business you are doing, my dear student? If you are doing that business and from that you generated something, it will come under where, sir? Revenue from operation. Other than that, if you generated anything, it will come under where, sir? Other income, like rent received, dividend received, interest received, profit on sale of investment, profit on sale of fixed asset, loss. Sir, loss eppadi varum sir other income le? Will loss come here or loss will come somewhere else? Where it will come, sir? Loss. We'll discuss that one. Loss is a pending part. Okay. So up to this, is it clear to everyone? So Roman 1 is what, my dear student? Revenue from operation. Roman 2, other income. Roman 3, what, sir? Total income. Thereafter, we'll get what, my dear student? Roman 4 is what? Expenses. Roman 4, what, sir? Expenses. So what will come in the expenses? First one is what? Cost of material consumed. What is the first one, sir? Cost of material consumed. What is the first one? Cost of material. So what do you mean by cost of material consumed? In the cost of material consumed, what will come, sir? That is nothing but opening stock. Opening stock of what? Raw material. Opening stock of raw material plus purchase of what, my dear student? Raw material minus, very good, closing stock of, yes, closing stock of raw material. We get what, my dear student? Raw material consumed. Yes or no? What we get, my dear student, here? We'll get raw material consumed. Cost of material consumed. Cost of raw material consumed, will get this one. Are you able to understand? Right? So how to find out cost of raw material consumed? Loud and clear. How to find out cost of raw material consumed? Loud and clear. Opening stock of raw material plus purchase of raw material minus closing stock of raw material. You will get what, sir? Raw material consumed. Is it clear? Okay, sir. Idanalla purida, sir. Next, my dear student. Purchase of stock in trade. Purchase of stock in trade means our normal purchases. Which purchases, sir? Normal purchases will come under in purchase of stock in trade. Next one, normal means purchase of goods. All this will come under purchase of stock in trade. Change in inventory of, this is very beautiful, my dear student. Change in inventory of what? Finished goods, work in progress and stock in. Sir, they mention here finished goods. Okay. Work in progress. Okay. Stock in trade. Okay, sir. They have not mentioned raw material, no, sir. Because stock includes what? Raw material, WIP and finished goods. So raw material is missing here, sir. Tappu, sir. Raw material is not there. Then what? Is it correct or wrong now? Is this correct? There's a change in inventory. Because inventory includes what? 3 things I told you. Raw material, WIP and finished goods. They have mentioned only what? Finished goods and work in progress. Yes or no? That means raw material is not mentioned here. Appu inna, sir. Shall we mention here raw material? That change in inventory of raw material, finished goods, WIP. Shall we mention here, sir, or not? Or this is correct? Tell me fast. Yes. Correct. Okay. But raw material missing le irukana. Very good. Very, you become genius. Yes, you people become now genius. I know you are genius only. Okay. sir என்ன சார் நீங்க சொல்றீங்க? These things raw material is already covered where, sir? Where it is covered? In the cost of material consumed. And change in inventory 9, opening minus closing. Change means what, sir? Opening minus closing. So opening minus closing is equal to opening minus closing is equal to what, sir? Change. Sir, we already recorded this one. Where, sir? Opening minus closing. Already change is here, sir. So திருப்பி change வராது. Are you getting my point? Yes or no? Are you able to understand? புரியுது இல்லையாடா? Yes or no? Right? So I hope it is clear to everyone. So we are not writing here raw material because already is covered in the cost of material consumed. Next, my dear student, change in inventory of what, sir? Finished goods, work in progress, and stock in trade. Okay, change now. How to find out this change, sir? Opening minus closing. Is it clear? Shall I proceed further? Okay, sir. Employees benefit expenses means what? Next one is what's the employee benefit expense means what? What will come in employee benefit expenses? Salaries. Okay, employee contribution to provident fund. Next, what will come next? Wages, bonus. Next, what? Expenses to employee, refreshment expense and all. Anything given to the employee will come under where, sir? Employee benefit expenses. Are you able to understand? So first one, Roman one is what? Visualize, feel. First one, revenue from operation. Roman 2, Roman 3, Roman 4, expenses. In that, number 1. Then next, stop. Number 3 of finished goods, work in progress, stock in trade. Next, employee benefit expenses. Very good. What will come in employee benefit expenses, sir? As we discussed, salary, wages, provident fund contribution, bonus. He is very particular about the refreshment. So you are getting some refreshment expense, Tanya? Are you getting refreshment expense or not? Unmai solla. Are you getting refreshment expenses? Oh, that is from your pocket. I am asking from the company pocket. Yes? Very good. He is very happy, you know. Sir, இப்போதான் 4 நாள் ஜாலி இருக்கோம் சார். நாங்க இல்லைன்னா நம்ம ரொம்ப ஒர்க் பண்ணோம். கரெக்ட் தானடா ஹரிஷ்? எஸ் ஆர் நோ? ரைட் சார். உண்மை வெளியில என்ன ஹரிஷ்? கரெக்ட் தானா? வெரி குட். ஓகே, நெக்ஸ்ட் மை டியர் ஸ்டூடெண்ட், ஃபினான்ஸ் காஸ்ட். ஃபினான்ஸ் காஸ்ட் என்னடா ஷஃபி யாடா லேட்? அப்படியா? சரி. அதான் பார்த்தேன், என்னடா இங்க ஷஃபி காணும். ஓகே பொறுமையா உட்காரு. தண்ணி வேணுடா? இருக்கேன், குடி. Okay, so my dear students, next will come what? Finance cost. In finance cost, what will come, sir? Finance cost, what will come? Interest cost. What will come, sir? There, interest cost. Interest 9, sir. Interest on debentures, interest on loan. Yes or no? Interest will come in the finance cost. Okay, sir. Depreciation, amortization. Sir, என்ன சார் சொல்றீங்க? டெப்ரிசியேஷன், அமார்டைசேஷன் சின்ன வயசுல இருந்து எங்களுக்கு தெரியும். டெப்ரிசியேஷன் என்ன, கரெக்டா இல்ல? அமார்டைசேஷன் என்ன, கரெக்டா? ஓகே, so you know what is depreciation? Yes, what is depreciation, sir? Reduction in the value of fixed tangible asset. Amortization என்ன, sir? Reduction in the value of fixed intangible asset. Intangible asset, you know, when it's reduced, we call as a amortization. When, okay, like for example, amortization la enna theriyuma, we purchase one goodwill. That goodwill we are using in the business. When you use that goodwill in the business, over a period of time, the value has to reduce. Which value? Not that goodwill, the value which we purchase na, and the value kami avunu. You know, we paid a particular amount for a particular period. So over a period of time, the benefit has to exhaust it from the business. That's why we write, instead of depreciation, we write what, sir? amortization. Correct, right? Generally, when people become so much intelligent, they get amortized. You might have seen that. You might have come across one situation. On the person, romba intelligent ra. Somma intelligent. Okay, one point of view. After some days, you'll hear one news. You know what? He is in the Egmore. What is in the Egmore? Yes or no? So too much noise is not important. Not necessary. It is not good. We should have what is required. I always keep what is required knowledge only. Right? That is only important. Right? Yes or no? Okay, anyway. So I hope you understood what is depreciation, what is amortization. Next one, what, sir? Other expenses. Other expenses, na sir. Whichever expense not covered in this will come under other expenses. So example solunga sir. Example number 1, audit fees. Number 2, printing and stationery expenses. Then what is next one, sir? Advertising. Very good. Which advertisement you saw latest? Mobile advertisement. Okay. So advertisement expenses next. Rent. Wow, very good, Harish. Ipoda Harish Willi level. Rent, electricity. Next. What you are going to process? Accounting charges. Yaar, accounting panna pora nahi. Okay, pa. This is a live class, okay? Next. So he says some processing fees and all. Okay, next. Tell me other expenses. Tarun. Thinking. Okay, think. Okay, consulting. Okay, what type of consultation? Avangala the income, unaka the expense, correct? Okay, number expense. Very good. Yes. Okay, very good. Yes, any other? Fuel. Yeah, ama. The romba mukkyoda. Right, tank fill pannu. Correct. What we should fill, sir? Not tank the use panna pa. Okay, other thing I have not used. Okay, tank inna fill pannu. Fuel. Correct, right, sir? Very good. Fuel expenses. Now there are different type of fuel. For consumption of bike and for consumption of filling the blank. Service charges. Yes. Next one. Podam, sir. Example. Correct. Harish come to one point. Podam. Do you have any doubt in this? Any doubt do you have? Yes or no? No. But enaka kuncha doubt erika. Na kelvi keknu. Keklama. Shall I ask some doubt to you? You should tell me where this will come. You know now. Sir, expenses, what it come? Cost of material consumed, purchases, change in inventory of finished goods, work in progress, employee benefit expenses, finance cost, depreciation, amortization, other expenses. Correct, Ilya? But I have one doubt, my dear students. Where the bank charges will come? Bank charges, where it will come? Finance cost, very good. I am expecting the answer. Finance cost, it will come. Bank charges will come in the finance cost. Who said finance cost? Raise your hand. Shafi, who said, sir? Other than finance cost means other expenses. Who said other expenses? Raise your hand. Balance in the pakoda. Which side balance? Ida kuda illa. Ina Shafi. This will tell me. Yes. Thinking, other expenses, correct? My dear student, whoever said that it will come in the finance cost, you are absolutely wrong. Because bank charges is a charge by the bank. It is not a part of interest. So it will come under where, sir? Other expenses. Whoever said other expenses, you are absolutely right. So clap for yourself. Yes. கிளாப் பண்ணும்போது சத்தமா கிளாப் பண்ணணும், ஜாலி ஜாலி கிளாப் பண்ணணும், அப்படியே அந்த மாதிரி பண்ணக்கூடாது. ஓகே ரைட். ஓகே நெக்ஸ்ட் ஒன் கேள்வி கேட்கலாமா திருப்பி? எஸ் ஆர் நோ? ஓகே. லாஸ் ஆன் சேல் ஆஃப் இன்வெஸ்ட்மெண்ட், வேர் இட் வில் அப்பியர்? நீ சொல்லாதடா. லாஸ் ஆன் சேல் ஆஃப் இன்வெஸ்ட்மெண்ட், வேர் இட் வில் கம்? சார் என்ன சார் நீங்க சொல்லி கொடுக்கவே இல்லையா சார் இது இல்லாமே? Right, where it will come? Yes. Yes, my dear sir. Where it will come? Finance cost. Finance, you have too much attachment with finance. Huh? Yes, Shafi, Suluda. Shafi. Where it will come? Loss on sale of investment. That loss, where it will come? Saravanan, legend Saravanan Sulupa. Amada, legend Saravanan. No problem, you are wrong, right, doesn't matter. Other income. Okay, so yes, others. Other expenses, very good. Rather mathematics சொல்லுங்க. Other income, other expenses. அவனி மா நீ சொல்ல finance cost, நாலு பேர், four students will give four different answer. So கண்டிப்பா it will come in one, right? Right. So my dear student, it will not come under the other income. It will come in the other expenses, because the loss, and this schedule 3 is very clear that if the profit na you write in the other income, loss na you write where in the other expenses. Is it clear? Yes or no? Right. I hope it is clear to you. Now if you have any doubt, you can ask me. Up to this, any doubt do you have? No doubt? Very good question. Discount received enge varuma? Very good ma. What is the name of your? Chandrika? Huh? Oh, Vinita. Okay, Vinita said correct answer. Clap for Vinita. Yes, very good ma, very good ma. Para Harish apply clap பண்றப்பா. என்னப்பா ஹரிஷ் உனக்கு? Okay. Next one. If discount, only discount is there. Only discount. That means discount paid, okay va? Where it will come? Or discount at allow. Very good ma Vinita. What happened ma? In the Philil put a piece after when the fire one time Vinita. Very good. Okay, it will come under where, sir? Other expenses. Is that clear? Yes or no? Sir, carriage inward, carriage outward, where it will come, sir? Shafi. Expense the other. Where it will come? Very good, right? It will appear in the other expenses, right? I hope it is clear to everyone. Yes or no? So once you write, once you did the total, you will get profit before exceptional and extraordinary items. Yes, and tax. This exceptional item, extraordinary item, you minus, you will get what's the profit before tax, and you will get less tax, you will get profit after tax. Generally in our exam, what is relevant for you? We write here profit before tax, and from this we less what's our tax, you will write what's the profit after tax. Is it clear? Other things, yeah, unga exam le varada, right? It is only relevant up to this. This is not. But you can ask me, sir, what is the difference between exceptional and extraordinary? Anyone can tell me? What is the difference between exceptional and extraordinary? Extraordinary means what? Okay. Luxurious thing is extraordinary. Okay. So practical things is, sir is telling that, sir, exceptional na, like you know, I will tell a business example, okay va? You will understand better. Extraordinary item means those items which never happen frequently. one which happen once in a while. For example, a refund from the government. Is it a extraordinary item or ordinary item now? Previously it was what, sir? Extraordinary. Now it is extraordinary only. Yeah, please, sir. We pay the tax. Once the tax goes to government now, okay, but when it come back, it is very difficult to get back that money. Second thing, fire happen in the business premises, right? So when fire happen, is it a extraordinary or ordinary? Ordinary, yeah? You will say, sir, yesterday we discussed in the insurance claim. Can you say, sir, in my business premises, last year it was the fire. I will ask fire, hey fire, last year you burned my office, na? Today is your day, start. Is it ordinary or extraordinary then? Or extraordinary, correct, Ilya? Yes or no? So I hope you understood what is extraordinary. Sir, exceptional inna, sir. Exceptional inna. You are doing one business, my dear student. In that business, one product become defective. One product become defective, and the product is there now. When you make some charges, when you make some repair expense on that product, it become what's an exception. And the item motto exceptional item. Others are normal item. Huh? Not understood. Okay. For example, you are doing cloth business. Correct. In that cloth business, one cloth got torn, some damage. Now you want to repair that. You need to what? Pay some expenses to make it sellable. So you are paying some expenses now on that. That item, that one shirt or one pant which got damaged, is it extraordinary for a business? It's ordinary only, but it is that item become now exceptional item. Are you getting my point? That item become what, sir? Exceptional, because it will not happen frequently. So you cannot go, so extraordinary is that? No. Is it ordinary in the course of business? Yes. But since you paid extra money on that, it becomes exceptional to the main item. Exceptional to what, sir? Your main item. Is it clear? Exceptional generally comes, related to your product of the business, what you are doing. Is it clear? Yes or no? Are you able to understand, my dear student? Other things is okay. I hope it is clear to everyone. Let me ask 2-3 questions. Donation, where it will come? Donation received from the government, where it will come? Other income. Very good, son. For the banking company, bank, they receive the interest, where it will come? Bank will receive the interest, na? Revenue from operation, their main business activity. From that they are receiving the interest. I hope it is clear to everyone. So with this we have completed what's schedule 3 part 1, okay, division 1, part 2, division 1 of the schedule 3. Is it clear? Yes or no? So jolly very good, very good. Harish is on fire. Now I will check your knowledge whether you understood or not. So what we do, we'll see one sum. So 1 or 2 sums we'll try to solve, right? So it will be easy for you. Let me check. Okay. This is okay. My dear students, this is the illustration 7. Okay. Now by seeing this sum, now you will understand. Okay, sir, it is very, very easy, right? Let's focus now. My dear student, first one, you should tell me where this item will come now. Okay, whether it will come in the balance sheet or statement of profit and loss. If it is in the balance sheet, where it will come directly, you should tell me, right? For example, building, you should tell PPE. Correct? Yes. Shall we start? Ready? Building, machinery, closing stock. Closing stock, sir, doubt. No problem. Doubt vechikla, okay va? What, wherever I feel you have doubt na, I will mark the circle. Okay va, in the mari circle appu will discuss. Loose tools, circle. Purchases, purchase of stock. Okay, purchases, very good, very good. Okay, next one, salaries, very good. Director fees, wow, super. Rent, good. Depreciation, very good. Bad debt, very good. Investment, investment, balance sheet, nothing is mentioned, you should write as a non-current investment. Okay, nothing is mentioned means you should always write as a non-current investment. Okay, next one, interest accrued on investment. Other, interest accrued on investment. Sir, doubt, no problem, I'll explain all these things, you should not worry about this. Debenture interest, very good man, Vinita, very good. Next, advance tax. Advance tax, what is that? Advance tax, where? Sir, doubt sir, no problem, once I clear all these things you will understand. Next one, sundry expenses, sales, revenue from operation, very good. Outstanding expenses, okay. Next one, provision for doubtful debt, okay. Equity share capital, share capital. General reserve, reserves and surplus. Profit and loss, reserves and surplus. Creditors, trade payable, very good. Creditors, where it will come? Trade payable, very good. Provision for depreciation on building, on machinery. I have to explain this, what do you mean by that? Next one, 14% debenture, where debenture will come? Where debenture will come? Hey, where it will come? Very good, long term borrowings, very good. Then interest on debenture accrued, sir, doubt sir. Interest on investment, interest on investment, finance the interest on investment inna, you invested the money and you receive the interest, how it is a cost, finance cost for you? Other income, where it will come sir? Other income, very good. Unclaimed dividend, some people didn't claim that dividend, we need to pay that, future we will be paying that dividend, where it will come? Liabilities, where it will come in the liability? Other current liability, yes or no? Okay sir, come to next one, debtors, where debtors will come? Non-current, okay, it will come in the asset. Trade receivable, I told you, trade receivable includes what sir? Debtors plus bills receivable. Next my dear student, bank, cash and cash equivalent. Up to this is it clear my dear student, please tell me, up to this is it clear? Yes, easy up to this. Let's come to the few points I need to teach you before this. My dear student, always remember what you need to remember. First thing, now please, if I ask you what is the accounting process, what is the accounting process sir? Our accounting process is like, first there is a entity, then there is a transaction, right? From the transaction we prepare what sir? Yes. From the journal we prepare what sir? Ledger. From the ledger we prepare what sir? Trial balance. And from the trial balance we prepare what sir? Final account, which is a financial statement, correct? You do any business financial, you prepare any business financial statement, whether it's a profit making or non-profit making organization, the accounting flow is remain same, it will not change. First there is a entity, then there is a transaction, journal, ledger, TB, final account. Nalla gaunichikonga. Please understand now here. My dear student, there was a transaction. From the transaction we prepare what, sir? Journal. Journal, there is always debit and credit. From the journal we prepare what, sir? Ledger. That means the journal entry which you pass, that entry already we record in the debit as well as what, sir? Credit. Yes or no? From the journal we prepare what, sir? Ledger. That means the ledger, it might have come in the two places. That transaction, correct? From the ledger you are recording where, in the trial balance. That means trial balance also it might have come in the two places, correct? Now you prepare the TB, na? Any item which appear in the trial balance, I repeat, any item which appear in the trial balance, it has to come in one place only, in the final account. Yes or no? Why, sir, one place? Because already it has, the journal has given the impact in the two places. Already you prepare the two accounts. Yes or no? So when you prepare the two accounts, let's say example, you purchase machinery on credit. So when you purchase the machinery on credit, your entry will be machinery account debit towards the party account from whom you purchase. So when you prepare the ledger, machinery account you write to party and the party account write by machinery. When you close the account, you will find in the, when you close the account, based on that you prepare the trial balance, you will say, it will look like this, that in the trial balance it may look like this. You write here machinery, let's say 1 lakh rupees, and you close the party account, that will look like how much, sir? 1 lakh rupees. Are you able to understand? That means from the transaction you prepare ledger, from the ledger you prepare what? TB, and the TB already this item has appeared. So any transaction, any item which appear in the TB, it has to come how many places, sir? One places. It has to come how many places, sir? One place. It has to come how many places? One places. Which one place, sir? It in the final account. Either it will come in the, I repeat, either it will come in the statement of P&L or it will come in the balance sheet. It will not come in the two places, because already for that transaction you pass the journal entry. Logic puri the ille hum loga. Yes or no? Right? Shafi, are you able to understand? Right? Sir, that means any transaction which appear in the trial balance, it has to come in one place. Yes, it has to come in the one place. It will not come in the two places. Okay, sir. If the any transaction which appear in the additional information, then for that, how many places it will come, sir? It will appear in the two places. So which are the two places? It will appear statement of profit and loss and balance sheet. Are you able to understand? Are you getting my point, what I am trying to say? Because for those transactions, we haven't passed the journal entry. Since we haven't passed the journal entry, as per the double entry system, we have to give the impact debit as well as what, sir? Credit of those transactions which appear in the additional information. Are you getting my point? Yes or no? So always remember, my dear students, these things you must remember, that any time if you find any item in the TB, it has to come in one place. Any item which appear in the additional information, it has to come how many places, sir? Two places. Is it clear now? Yes or no? Sir, appo the information irukana, sir? In the information, in the closing stock, this all this TB dana, sir? Because TB na, it will get tally, correct? So it has to come how many places, sir? One place. The item which appear in the TB, sir, it has to come in one place. We understood, sir. And the item which appear in the additional information, it has to come how many places, sir? Two places. Sir, this closing stock will appear how many places, sir? Two places. Sir, this doubtful debt will appear how many places, sir? Two places. This depreciation will appear how many places, sir? Two. That means what I am trying to say, it has to appear how many places, sir? Two places. 100% it has to appear in two places. Is it clear? Yes or no? Now how to identify which place it will go? Correct? Right? It will come in one places. Okay, sir. What about this? How should we understood that where it will go? This item, whether it will go in the balance sheet or in the statement of P&L. by nature of the item, by the nature. What is the primary character of that item? Is it asset, liability, income, or expense? For example, my dear student, let me ask you one thing. You tell me one thing, that outstanding expenses, outstanding expenses, any expenses, you tell me, if it is in the TB, it has to come how many places? One place. Now, which one place it will come? Some people will say, sir, it will go in other expenses. Some student will say it will go in the liability side, in the balance sheet. What do you feel? What is the nature of this item? Asset, liability, income, or expense? Outstanding expenses. What is that for you? Liability. Primary is what, sir? It's the liability for you. So that means, sir, they might have passed the entry. If any item come in the TB, means what? They have passed the entry. What entry they might have passed, sir? They might have passed the entry called expenses account debit to outstanding expenses account. Correct? What entry they might have passed, sir? Expenses account debit to outstanding expenses. Sorry, the entry they already passed. That's why that amount added in the expenses and the new account created. Which accounts are? Outstanding expenses. Are you getting my point or not? Harish, now the question comes, this expense is a nominal nature account. Will appear in where, my dear student? It will appear in the, where it will appear? In the other expenses. It will appear in the other expenses, my dear students. But what about the outstanding expenses? Outstanding expenses are the liability for the business. Sir, is a liability for the business? Okay, sir. But is it a current liability or non-current liability? Sir, outstanding expense is a current liability for us. Sir, current liability, and there are again how many items? 4 items. Hey, correct? 4 items are there. So which are the 4 items, sir? Number 1, short-term borrowing, trade payable, short-term provision, other current liability. In that, where it will come, my dear students? Very good, sir. It will come where, sir? Other current liability. Are you able to understand? So by nature, you should ask yourself where it will go. What is the nature of that item? Is it an asset? Is it a liability? Is it an income or expenses? Suppose if I write here expenses, let's say I write here salary. If salary is in the TB, then where it will come, my dear student? One place only. Salary will go to where then? By nature it is expenses. So it will go where, sir? Employee benefit expenses. But if I say salary outstanding, by nature it is a liability. Are you getting my point? Yes or no? So where it will go, sir? Balance sheet. Liability, that is called other current liability. Are you getting my point? Yes or no? Boys and girls, purida illada? Yes, nalla purida unglaka? Yes, right? Okay, sir. Ida purida sir englakam. That any item which appear in the TB, it has to come in one place, sir. And where it will go, sir? By nature, we have to understand that. Correct? Now, my dear student, my question to you, think this outstanding expenses is there now. Now you become intelligent. Outstanding expenses in the TB, where it will go now? Where it will go? Balance sheet. Where, sir? Liability. In that, where, sir? Other current liability. Purida illa? Yes or no? Sorry, the nalla purida, sir. Sir, next one, let's come to this. So this got clear, my dear student. Is it clear now? Outstanding expenses, where it will go? Yes or no? Is it clear to everyone? Okay, sir. Next, my dear student, let's try to understand next one. Interest accrued on investment. Interest accrued on investment. By nature, what is that? Interest accrued on investment means what? We haven't received that interest. We are yet to receive. We'll be receiving in the future. So what is that for us? By nature, what it is? Is it an income, expense, asset, or liability first? Asset. Correct, Ilya? So income na, sir, income na? Buddhu, it is not income. It is income, but already they passed the journal entry na. What entry they might have passed? Income accrued account debit to income account. What entry they might have passed, sir? Income accrued account debit to income account. So already that accrued income added in the income. Yes or no? Yes or no? That accrued income they are already added in where, sir? In the income. So kiripinninga adu add pannakuladu. Are you able to understand or not? So by nature is what, sir, for us? By nature is what? It is a now asset, and it will appear in where, sir? Balance sheet asset. But asset na where, sir? Where it will appear in the asset? Current asset. In the current asset where, sir? Other current asset. Are you able to understand? Sir, is it a investment, sir? No. Is it a trade receivable, sir? No. Is it a cash and cash equivalent, sir? No. Is it other loans and advances? No. Then what is that? What is that? Other current asset. Are you able to understand? Yes, Shafi Purdi Illama. Are you getting my point, everyone? Yes or no? Okay, sir. Sorry, the Nalla Purida sir Englaka. So I hope this point also clear to everyone. Interest accrued on investment. Where it will go, my dear student? Balance sheet, asset, under that other current asset. Is it clear? Yes or no? Okay, sir. Sir, advance tax. Again, it will come in one place. Advance tax is what for you? You paid the tax in advance. What is that for you? Asset, liability, income or expense? You paid advance tax. Is a liability, asset, income or expense? What is that for you? Asset. Yeah, please, sir. A number advance pay panna poro. Right? We paid in advance. Ada namlaga inna first. Asset. We paid something in advance. For example, Saravanan, you gave 10,000 to your friend Harish. So for you, what is that? Liability? If it is liability, na Harish, Harish will ask, "Tirbi kepe." Hey, Saravanan, you 20,000 pulu, 1 lakh pulu. Yes, sir. What is that for you? Asset. So you paid something advance. It is what for you then? Is asset for you. Are you getting my point? Yes or no? So advance tax will appear where, sir? In where, sir? In the balance sheet. Current asset. In that where it will come? Will it come in other current asset or where it is other part? Where it will come? Or it will come in the loans and advances. One heading is there, correct? Where it will come? Short-term loans and advances. You given some advance, it will appear in the short-term loans and advances. Harish, are you able to understand? I hope it is clear to you people. Are you getting my point? It has to be set in mind where it will come now, right? Okay, sir. So I hope advance tax is clear. Advance tax is clear to everyone. My dear student, next one. Please come to next. Sir, this closing stock now. This closing stock, where it will come? By nature is what? Stock by nature is what? Asset, liability, income, expense. Okay, which one? Closing stock. Closing stock by nature is what? Is it asset, liability, income or expense? First thing, asset. So asset now where it will come, sir? Balance sheet, asset. In that, which asset? Current asset or non-current asset? Current asset. In there is inventory. Separate heading they are given. Inventory. So this closing stock will go where, sir? In the inventory. Some student will say, sir, it will go to change in inventory. My dear student, they themselves gave the closing stock, which it means it already adjusted in the books of accounts. Are you able to understand? Yes or no? Is it clear? Yes, boys and girls, right? Okay. Sir, loose tools. Loose tool is what, sir, again? It is also the asset only. So loose tools na inna, sir. You know, some companies, they will have the machinery, many machinery. If you go to TVS, Lucas and all, Lucas, TVS, there are so many machinery. Many times their work will be going on. So every day they need to check their nut bolt of that machinery. So they will have the nut bolt in stock. In the stock only they will keep. So that every day they have to check the machinery's nut bolt. So this is a loose tool. The tool now, machinery spare part, all these things are in the loose format. Loose format nahi na sir, not full machinery, only loose now 10, 15, 6, whatever they need in the loose format. That tools are there, that spare part are there. So that is what for the business, that is a asset, and that will be the part of what sir, inventory. That is what is part of what sir, inventory. That is what sir, stock. Are you getting my point? Closing, yes, loose tool also inventory. Are you able to understand? Yes ma, Sulu. Yes, we are considering asset only, but not a fixed asset. Loose tools are not fixed asset na. Normal. This is the normal stock, closing stock money assume pannu ide actually. AS2 valuation of inventory. They said the loose tool will be treated as a part of inventory only, because for the business they need some spare part in the loose format, so they can replace anytime whenever they need. So don't take that as a part of machinery, don't consider part of the asset, because they will not give you the benefit more than what sir, 1 year. Are you getting my point or not? So loose tools, if that loose tool is going to give the benefit more than 1 year, upper you can consider as a part of the PPE, otherwise it is a part of what sir, inventory, stock for you. Is that clear? Yes or no? Are you able to understand? Okay sir, so I hope this two also got clear. Yes or no? Right? Now this provision I will be discussing later. Building provision for depreciation and all. Sir, what do you mean by provision for depreciation? What is the meaning of this provision for depreciation in okay, okay, my dear student, see, nalla gaunichikongada. In this question they have given depreciation also, and they have given provision for depreciation also. There are two methods, my dear student. If you know the core in financial accounting, we discuss accounting for depreciation. What we discuss, there are two methods to record the depreciation, to charge the depreciation. Which are the two methods, sir? One is called normal method of charging depreciation, and other one is a provision for depreciation or accumulated depreciation method. In the normal method, what happens, sir? We charge the depreciation, we pass the entry. What entry we pass? You know, we pass the entry called depreciation account debit to asset account. So in this normal method, your asset account will appear at which value? You know, WDV. Asset account will appear in which value, sir? WDV. But in case of provision for depreciation account, we pass the entry called depreciation account debit to provision for depreciation. That means the moment you pass this entry, it means your asset account will appear at which price, my dear student? Which price? Cost price. Yeah sir, cost price, because you are not routing the depreciation through asset account. In this case, you are routing the depreciation through which account, sir? Asset account. So asset value is reducing. Asset will have which balance? A debit balance. You are crediting the asset. So that means you are reducing the asset value. But in this case, what, my dear student? You are not charging the depreciation to asset. So asset will be at which price? At which price? Cost price. And the depreciation will be where, sir? In the provision for depreciation. So each year, Shafi, each year when we charge the depreciation, what we pass the entry? You know, depreciation to provision for depreciation, depreciation to provision for depreciation. That means the depreciation will get accumulated where? Where it get accumulated? Provision for depreciation. Are you able to understand what I am trying to say? Yes or no? So whenever you see provision for depreciation account in the TB, it means they are maintaining the asset account at which price, my dear student? Cost price. Which price? Cost price, because they haven't charged the depreciation to which account, my dear student? To the asset account. Yes, are you able to understand? Yes or no? Are you getting my point? Sir, then what is the use for us, sir? Why are you telling all these things? Because my dear student, in the balance sheet, when you write the PPE, in this PPE, you should write like this: gross value less depreciation. Which depreciation, sir? Total provision for depreciation. You should subtract. And your net value only should appear in the balance sheet. Are you getting my point? Are you able to understand? Yes, sir. This is very, very important, my dear student, that if whenever the provision, I repeat again, when provision for depreciation is given in the TB, it means the asset appear at a book value. No, asset appear at a cost price. So you should minus cost minus provision for depreciation. You will get what, sir? Net value or WDV of the asset, and that value should appear where, sir? In the PP balance sheet. Are you getting my point? Yes or no? Right? So, sir, here building value how much, sir? Building value how much? 11 lakh 60. Their provision for depreciation how much, sir? 2 lakh. So how much will appear in the PP, sir? 9 lakh 60. Then machinery how much, sir? 4 lakhs. Here machinery depreciation 2 lakh 20. So how much appears, sir? Are you getting my point? Yes or no? You add both, total will come under the PP. Total will come under where, sir? PP. Are you able to understand? Yes or no? Is it clear to everyone? Yeah, please, sir. Like in this, when you prepare, you should write like this. Yeah, please, sir. PPE. In that you write which are the PPEs given. First, building. Then what is the next one, my dear student? Machinery. Always write first what? Gross value. What is the gross value or opening value? How much? 11 lakh 60,000. Machinery how much? 4 lakhs. 4 lakhs. No, machinery value how much in the books? 2 lakh 20, huh? 4 lakh. Okay. From this, you should say less provision for depreciation. How much? 2 lakhs. And this is how much, sir? So, my dear student, how much will be the net value? This is how much? So, in our balance sheet or PP will be how much, you know? This plus this is equal to 9 lakh 60 plus 1 lakh 80. How much it will be? 11 lakh. This will be what, you know, my dear student? This will be the PPE schedule. Are you able to understand? You should not write separately. This you prepare the notes and write it. Are you able to understand? Yes or no? Right? Sir, inventory na, sir? Inventory. What will come in inventory first? You write the inventory. In the inventory, you should write first closing stock. And in that, you should add the loose tools. Is it clear? There is a total inventory. Total it, write in the balance sheet inventory total. Are you able to understand? Yes or no? Is it clear? Yes. Right? Okay. Sir. One thing I haven't understood, sir. So I hope first before starting this building, you understand now depreciation, provision for depreciation. Clear? This provision part is clear now? Yes or no? Like, okay. Come to the next one. Sir, what about the interest on debenture accrued but not due? Sir, what is that for us? Is it a asset, liability, income or expense, my dear student? Please tell me. Interest on debenture, what is that for us? Yes, what is that for us? Other income. How it is income? You are paying the interest on debenture. So, what is that for us? Liability. Correct? It is what, sir? Liability. Yeah, number the interest on debenture pay pannu. Ippo number pay pannile. But in the future, we are going to pay that. Yes or no? When in the future you are going to pay that, my dear, so it become what? Your liability, and it will appear in the where, sir? In the balance sheet under the heading of it is current liability. In the, because this is the interest due accrued but not due. It is only for the 1 year. Next year only they have to pay that. Accrued current liability under the heading of current liability. In that other current liability. Are you able to understand? In that other current liability. I hope it is clear to you everyone. Up to this, are you able to understand or not? Please tell me yes or no. So I hope up to this everything is clear. What left, you know, one is provision for provision for doubtful debt, and one which I feel to explain, that is called, you know what, that is called adjusted purchases. Yes or no? So this point I am going to explain to you. Thereafter we'll discuss what's the additional information. Okay, wa? Yes or no? Right. Okay, sir. So provision for doubtful debt means what? What do you mean by provision for doubtful debt? My dear student, as we discuss, there are three types of people. If you remember in the FA class, I have taught you people. There are three types of people in this world. Right? Which are the three types of people, my dear student? Number one, first we call as a bad debt, pakka fraud. Yes or no? We call as what, sir? Bad debt. A debt which is irrecoverable. For example, I sold goods. Let's say I sold goods to whom, sir? Let's say I sold goods to Shafi, and Shafi ran away. It become my what, sir? Bad debt. Correct? Yes or no? Second is called what's a provision for bad debt. We feel that we are not going to receive the money. There is our expectation, not confirm. That is what's a provision for bad debt. And third category is what, sir? Discount on debtors. Discount na sir. For example, Shafi is there. He went to shop to purchase the goods. Let's say he came to me. He said, sir, I want to purchase goods from you. I sold the goods to him. I sold the goods to him on credit. He came to me to pay the money. He said, sir, I want to settle the amount. But can you give some discount to me? So discount on debtors. Again, it is an expense for me. All these three things are the expenses for me. Are you getting my point? Which are the expenses of? Number one, bad debt. Number two, provision for bad debt. And number three, discount on debtors. Is it clear? Debtors, na sir, how the debtors have born in a business due to the credit sales. You sell the goods on credit, there is a birth of debtors. Yes or no? You purchase the goods on credit, there is a birth of what, sir? Creditors. Are you able to understand or not? So my dear student, what I am trying to tell you, that whenever there is a, in exam also always remember, whenever there is a bad debt given in the additional information, it will come how many places, sir? Two places. Number one, listen very carefully. First one, you write the debtors. You will write the debtors, my dear students. From the debtors, you will subtract what, my dear student? First thing what you will subtract? Bad debt. You have to subtract what, sir? Bad debt. So let's say debtors is 1 lakh, my dear student. Bad debt is, let's say, 10,000. So your debtors will become 90. Correct? This 10,000 is there now, my dear student. It will appear how many places? Two places. Number one, less from the debtors. And number two, other expenses in the profit and loss account. Are you able to understand? Shafi, Purudai, yes or no? Hey, are you getting my point? So next one, if there is a provision for bad and doubtful debt given in the TB, again it will appear in two places. We minus next provision. Provision for bad and doubtful debt. Let's say it is 2,000. We'll minus from here. Now how much it becomes, sir? 88,000. My dear student, this 2,000 is there now. This 2,000 will appear again in two places because it is the TB. It is an additional information item. So we minus from the debtors, and where it will go, sir? Provision is a current year expenses namlaka, as per the prudence concept. Correct? So it will appear where, sir? In the other expenses only. Are you getting my point? Yes or no? Sir. Is okay, sir? Next, sir. If there is a discount on debtors, we subtract discount on debtors. Let's say it's 1,000. We minus this and we write here how much, my dear student? 87,000. Again, this discount on debtors will appear two places. One, minus from the debtors, and it will appear in the other expenses in the profit and loss. Statement of profit and loss. That means all these three things will go in the profit and loss account in the other expenses. But if it is in the additional information, they have to subtract in this order only. In the order level subtract out. First bad debt, then our expectation, and third is discount. Ninga kekla number in the categories, sir. Which category we belongs, out of these three? Discount. Whenever you buy, let's say Saravana is there. Saravana, you tell me, you went for shopping, you want to buy one dress. When you want to buy the dress, he said shirt cost it 1,000 rupees. Will you buy as it is? What will you say? Correct, right? So first we ask what, sir? Discount. So we we belong to which category, my dear student? Category number 3. That we need discount. That is number bloodly discount. Correct? Wherever discount, angela number 4. They say buy 2, get 1 free. Correct? But actually they are not giving the discount. Yes or no? My dear student, there are 2 types of discount in the world. Which are the 2 types of discount? Cash discount and trade discount. I am not talking here trade discount. I am talking here which discounts are this one? Cash discount, settlement discount. Are you able to understand? Yes or no? Trade discount is given to attract the customer. Attract pannu. The trade discount they give. But cash discount is given for early settlement. When your people pay the money to make them, so they should make the payment early. We give which type of discount, my dear student? Cash discount. Are you able to understand? Yes or no? I hope it is clear to everyone. Yes or no? Is it clear? Yes or sir? Is okay, sir? Nalla purida, sir. If the provisions are there in the TB, correct? TB ulla provision is there. Now how many places it will come, sir? It will come in the one place, na, sir. Sir, TB ulla provision is what, sir? Provision will always have the credit balance. Provision always will have which balance? Credit balance. So in the TB, the provision have which balance, sir? Credit balance. This means, my dear student, this is the opening provision. See here, last year provision. This is which year provision, my dear student? It is a last year provision. Which date they have given? 1/4/20. That means it is the which year provision? Last year we thought. Last year we thought that we are not going to receive how much, sir? 12,000. And current year how much is? Current year how much, my dear student? Current year provision how much, sir? 2,000. For example, this 2,000. It means what, my dear student? It means what? 10,000 we are going to receive today. Current year. Last year we thought that we are not going to receive 12,000. Shafi. Current year we thought how much we are not going to receive? 2,000. That means what, sir? Last year 12,000, current year 2,000. That means what? 10,000 I am going to receive now. That is what for us? Income. That is what for us, sir? Income, and it will appear in the other income. It will appear where, sir? Other income. What I am trying to say? Yes or no? But sir, if it's a 20,000 here, last year we thought that we are not going to receive 12,000. Current year become how much, sir? That means what? Current year how much is our expense? 8,000. It will come under the other expenses. 8,000. Are you able to understand? Yes or no? Yes. Is it clear? Yes. Are you able to understand? Sir, now come to the adjustment. This provision, let's see whether there is any additional information or not. Is there additional information, sir? Yes. What is the additional information? Provide doubtful debt. How much percent? 4%. Yes or no? So my dear student, 4% doubtful debt we need to provide. How much is the doubtful debtors, my dear student? Debtors is how much, sir? 5 lakhs. From the 5 lakhs, 5 lakh is there. Debtors is how much? Just now I show you the working. Debtors 5 lakhs. There is no bad debt. There is no. They haven't said any additional information bad debt. Have they said any bad debt information? No. So TBUL bad debt na, that is irrelevant. They already subtracted and amount has come. TBUL bad debt திருப்பி நீங்க subtract பண்ணக்கூடாது. Because this they have already adjusted and given the bad debt. They have given the debtors also. So if the bad debt is there, where sir? In the where? Additional information. Adha neenga subtract pannu. Purudha illaya? Tarun, are you able to understand? Okay. So my dear student, now from the debtors I subtract now what's the only provision. And how much is the provision they said, my dear student? How much provision? 4%. How much 4%? 20,000. Okay. So how much is the? That means this 4,80,000 will go to where sir? Balance sheet, trade receivable. Previous year. Yes. Bad debt, no. Generally you don't take bad debt. Provision only compare. Okay. Come to next one now. But what I taught in the FA, that is different. FA you can take the bad debt also. FA. You can reduce from the bad. That's what I'm telling. There we can. Here you generally don't take. Okay, va? I'll tell you what now. Okay, debtors is how much, sir? 5 lakhs minus what, my dear student? Provision for bad debt. How much? 20,000. This is which year provision for bad debt, sir? Current year. But already till last year, how much was the provision? 12,000. It means what, my dear student? Till last year, we supposed to not receive 12,000. Current year, how much, sir? 20,000. That means my current year, how much we are not supposed to receive, sir? Now excess 8,000. So 8,000 is the expense of the which year, sir? Current year, and it will appear where, my dear students? Other expenses. Is it clear? Are you able to understand? Yes or no? Right? Is it clear, boys and girls? Is it clear? Okay. So adjustment has come in how many places, sir? 2 places. So I hope that this point also clear now. Is it clear? Yes or no? Which point left, sir? Adjusted purchases. Now if I complete this point now, only what left, sir? Additional information. That's it. Now come to the adjusted purchases. My dear student, what do you mean by adjusted purchases? Can you tell me? What do you mean by adjusted purchases? So adjusted purchases means what? Anyone can tell me? Yes. Anyone have any idea about the adjusted purchases? No. Adjusted purchases means the purchases which got adjusted with opening stock and closing stock. That means our formula come opening stock plus purchases minus closing stock. This purchases which got adjusted with a change in inventory. Opening minus closing is what? Change. Are you able to understand or not? Opening stock minus closing stock, you will get what? Change in inventory. That means the purchases which got adjusted with what? Opening stock and closing stock. No, it is not a raw material. It is a finished goods. Are you able to get my point? Yes or no? So adjusted purchases will not have they use the word there, sir? Cost of adjusted purchases. Have they mentioned like this there? No. What they mention? Cost of material consumed. They have used their term. Are you getting my point or not? What they mention, sir? Cost of material consumed. They have not used the word cost of, or they have not used the word adjusted purchases. Difference you have to understand first. Raw material consumed and the raw material the varno. Are you getting my point or not? What has to come, sir? Raw material only has to come. Boys and girls. Adjusted purchase, na, they are not talking about what? Raw material. They are talking about the finished goods adjustment. Are you able to understand? Yes. How? That means you mean to say that everyone will manufacture the calculator. The manufacturer only will manufacture the calculator, na? If you purchase the calculator, no. Listen, I'll tell you. See what I'm trying to tell you. Listen very carefully. You purchase the goods, okay? You purchase the calculator. Is a purchases for you. You have some opening stock of the calculator. You have some closing stock of the calculator. As per the schedule 3, what you need to do? You need to show the purchases separately and change in stock, change in inventory of finished goods separately. This is what our schedule 3 format says. Both if you add, you will get adjusted purchases only. Change in inventory, what? Opening minus closing. That change you adjust with the purchases, you will get what, sir? Adjusted purchases only. Puri liya, sir. I will tell you one simple thing. Yes. Correct. Adjusted purchases. Correct. But now the question is, can you write adjusted purchases in the profit and loss? Are you getting my point or not? Can we write in the purchases? See, we have the format. What is the expenses format? Cost of material consumed, purchases of stock in trade, change in inventory of what? Finished goods. Correct? Your purchases, now in that, can I write this adjusted purchases directly? In the purchases, can you write adjusted purchases as it is? Yes or no? Question I repeat again, listen very carefully. If you see the format of statement of profit and loss account, expenses format, cost of raw material consumed, it is not a raw material, I told you clearly. Second is what, sir? Purchases of stock in trade, purchases. Third is what, sir? Change in inventory of what? Finished goods, work in progress, all these things. Correct? No, in this question they have not given what? Purchases. They have given which purchases? Adjusted purchases. My question to you, can you write adjusted purchases in the purchase category or not? In the statement of profit and loss. Sir said no. Very good. Sir said no. Others, think and tell me. Shabi, question puri dada. Shafi, question puri dada. Yes or no? Yes, Tarun. Yossi, sorry, I forgot. Yossi. It is not a raw material consumed. Please try to understand, my dear. So don't confuse with, sir, you said raw material consumed, opening stock of raw material plus purchase of raw material minus closing stock. I use their clear word, raw material. Have they said raw material here? No. They use the word adjusted purchases, means the purchases got adjusted with the opening stock of finished goods and closing stock of finished goods. That's why your adjusted purchases has come. Otherwise, they might have said cost of material consumed. Why they have not used this term? Because they know very well they are not a manufacturer. They are just a trader buying the goods and selling the goods. Are you able to understand? Yes or no? Shafi, are you getting my point? All of you? Yes or no? Hey, Purudillama, last. Are you able to understand? Now question comes. Can you write this adjusted purchases as it is or not in the statement of profit and loss? Purchases. Yes or no? The answer is no. You cannot write. That means what, sir? We need to calculate the purchases. We need to calculate purchase. Now the question comes, how to calculate purchases? Yes or no? For that they will give some additional information. They will give the additional information. Check the additional information, have they given or not. Now they said, what they say? Closing stock is more than opening stock by 3,20,000. Now my dear student, adjustment they have given, correct? That means why they given this information? You don't need this information. If you say, sir, I am going to write adjusted purchases in the purchase column and the closing stock in the already they have given in the balance sheet, my work is done. That means if you see this, you don't need what? This adjustment. Then why they are giving this information? To calculate the purchases. To calculate what, sir? Purchases. Are you able to understand? Shafi, are you able to understand? Oh, yes or no? Are you getting my point or not? Last. Are you getting my point? Everyone? Yes or no? Sir, idanella purida sir, but how to calculate? Now please focus here. Just 2 minutes. You focus, you will get entire grip about this concept. Now please focus. Now everyone please focus here. Understand. My dear student, what is the formula for adjusted purchases? Adjusted purchases is equal to what? Is equal to, very good, opening stock plus purchases. Okay, what? Now just focus. Just focus. Suppose if I write here, hypothetically, if I write here my opening stock 3 lakhs and my closing stock is 3,50,000, what does it mean? No, that is leave it. But I have not given the adjusted purchase. This is the pending part. I don't want. What is the meaning of opening and closing? If you want to classify this opening and closing alone, what you can say in sentence form? What you can say? Can you say like this, that your closing stock is more than opening stock by 50,000? Yes or no? Right? You can say like this, na sir, my closing stock is more than opening stock by how much, sir? 50,000. Are you getting my point? Yes. Suppose, now listen. Please focus here. Suppose my closing stock instead of 3 lakh, it become 2 lakhs. Up, what will you say? Opening stock is more than closing stock by 1 lakh, or closing stock is less than opening stock by rupees 1. Yes or no? Now please focus. Very, very important. My dear student, now what I am going to do, suppose my purchases is 10 lakhs. How much is my purchases? 10 lakh. Now can you tell me how much is my adjusted purchases? Please tell me my adjusted purchases. 10 lakhs plus 3 lakhs minus 3,50,000. How much? 9 lakh. Very good. 9,50,000. Is that clear? Yes or no? First thing I told you, don't write, don't copy, full concentration. I said that my opening stock is more than, my closing stock is more than opening stock by 50,000. My closing stock is more than opening stock by how much, sir? 50,000. It means what, sir? My purchases are current year is more when I compare with the adjusted purchases. Whenever, my dear student, my closing stocks are more than opening stock, I will adjust the change in my adjusted purchases to calculate what, sir? Purchases. Yeah, please, sir. Suppose I don't know this 10 lakh. Number very simple. My adjusted purchase, how much? 9,50,000. In this, I will say add. How much, sir? Add increase in closing stock. How much, sir? 50,000. We'll get how much, sir? Purchases 10 lakhs. Why I am telling like this? Because if you see here, this minus, when it go this side, it will become plus. Are you getting my point? Yes or no? Maths, simple maths, right? This, you don't have this one. 3 lakh minus 3,50,000, you will get the answer minus 50,000. This minus, when it go this side, it will become what, sir? Plus. So your purchases will become how much, sir? 10 lakhs. Are you getting my point? Yes or no? So like this, you should calculate your purchases. So the change in inventory, what will come, sir? Change in inventory. Change in inventory, you should write 50,000. But this 50,000 will come in the negative. Yeah, sir. What is the formula for change in inventory? Opening minus closing. Here, which one is more? Opening is more or closing is more? Closing. If the closing is more, it will come what, sir? Negative. When change in inventory come negative, your adjusted purchases, you should add it to find out what, sir? purchases. If your change in inventory comes positive, அப்போ என்ன பண்ணணும் நீங்க less பண்ணணும் from the adjusted purchases to get what sir? Purchases. Are you able to understand? Yes or no? More detail நம்ம போக முடியாத. This is what up to this. I hope it is clear to you. My dear student, now come to here. Now you tell me, your closing stock is more than opening stock by how much sir? 3,20,000. Now your adjusted purchase is how much sir? 8,40,000. Now can you tell me how much will be purchases then? How much will be purchases? Fast. How much will be your purchases? 11,60,000. Are you getting my point? Yes or no? Are you able to understand? Yes. Boys and girls, are you able to understand? And then in the change in inventory, how much will you write? Change in inventory, how much will you write? 3,20,000. But it should be in the what sir? Bracket. Yes sir, in the bracket, because closing stock is more than opening stock. Because our change in inventory formula is what? Opening minus closing. What's the formula sir? Opening minus closing. Here which one is more sir? Closing is more. That means our change in inventory will come in the negative. Is it clear? So if the opening is more na, change in inventory will come in positive only. But to calculate the purchases, what you need to do sir? You have to less. Are you getting my point? Yes or no? With this, we completed the closing stock adjustment, my dear student. Provision also we completed. So income tax, provision for income tax. Where will you calculate? On what will you calculate the income tax, my dear students? On the profit. Income tax is always calculated on the profit. So you will calculate the profit now. Profit before tax. Yeah, please sir. Total income minus total expenses. You get profit before tax. In that you should less what sir? Provision for tax. How much percent? 50%. Are you getting my point? And this provision for tax has to go two places now. Minus from profit and the balance sheet. Short term provision. Short term provision. Provision for tax. Shafi, purida illada? Yes or no? Are you getting my point? Yes? Okay sir. Depreciation. Now you tell me, is this information relevant for you? Is this information relevant for you? Yes or no? Yes or no? My dear student, this information is irrelevant for you. Why sir? They already given what sir here? Depreciation. That means they already passed the entry for what sir? Depreciation. What entry they pass? Depreciation to provision for depreciation. Sir, how you know it's tally? You add this, you will get 80,000 only. Add this 48,000 plus 32,000. How much you are getting, my dear student? 80. That is already they passed the entry for 80,000. 3P number consider pannakulada. Are you getting my point? Yes or no? Yes, we have to do two places. Yes. Because they already adjusted. They have given this information to confuse you. Right? Because you know all the information has to come how many places? Two places. Put this also two places. So answer will be wrong then. Are you getting my point? Yes or no? Last, transfer to general reserve. Transfer to reserve now what sir? Whatever profit you will get na? Which profit sir? Very simple. You prepare your statement of profit and loss. You will get a profit. From that you subtract the tax. Profit after tax you will get. That profit will go to the balance sheet na? Yes or no? From that you should subtract what you know, my dear student, less. Transfer to reserve. And the reserve you will say transfer from P&L account. So one place you will less, other place you will add. Are you able to understand? That is what adjustment. This is called appropriation of profit. Director proposed dividend, and this one proposed dividend. My dear student, proposal is very beautiful word. Proposal. Correct? Harish will tell now. Harish, in your life, have you got proposal or not? No proposal. Why da? Yes sir. So my dear students, proposal are what? Proposal are the contingent. They are the contingencies. It may happen, it may not happen. Proposed dividend. Dividend நம்ம pay பண்ணோம் sir. So proposed dividend is a contingent liability. It's what, sir? Contingent liability, and contingent liability will not appear in the books of accounts. So it is only you should mention in the notes to accounts in the balance sheet. Proposed dividend is a contingent liability. That's it. No impact on the financial statement. Are you able to understand? Yes or no? But in the real life, proposal will have the impact. Which impacts are financial impact. Okay, but in the in the financial statement, proposal will not have the impact because they are what, sir? Contingent liability. Is it clear? Yes or no? Right. Next come to bill discounted but not yet matured. This also a contingent liability. Yeah, sir, because whenever you discount the bill, whenever we discount the bill with a bank, primary responsibility to settle the bill is a drawee, not a drawer. Drawer na yaar number drop on the bill. Correct? So primary responsibility is what? So to settle the bill is a drawee or a responsibility. If he failed to pay, appo we have to pay. It become your contingency. It become what, sir? Contingency. This we have discussed in the, you might have discussed in the bills of exchange chapter. Which chapter, sir? Bills of exchange chapter. Somewhere across you might have studied. So my dear students, both are contingent liability, will not appear in the balance sheet. It will come in the footnote. Upon you class, sir, உங்களுக்கு எப்படி தெரியும் the contingent liability? Correct இல்லையா? They themselves given the list of the contingent liability which can be a contingent liability. Yes sir. There is a list of what, sir? Contingent liability. Where they have given this list, sir? The list has been given in the schedule itself. That list I will show you after some time. Up to this, is it clear or not, my dear student? Please tell me. Are you able to understand? Yes or no? Right? Yes. One more time. This closing stock will appear how many places now? 2 places. Which are the 2 places? Number 1, change in inventory, and next place where it will come, sir? Add in the adjusted purchases. Correct? Came in 2 places now. Next one, provision for doubtful debt, less from the debtors, other expenses. Then depreciation will not come because they already adjusted. Transfer to general reserve, my dear student, less from the profit, add in the general reserve. Then they both are what, sir? Contingent liability. Yes or no? Are you able to understand, my dear student? I hope up to this it is clear to everyone. Yes or no? Right? My dear student, after the break, what we do, we'll solve the sums. Okay, 1 hour we are going to solve the sums. We'll solve it, not discuss. We'll solve it, and then we'll go to the cash flow statement. Very beautiful. AS3, accounting standard 3, cash flow statement. Is that clear? Yes or no? And every attempt, my dear student, every attempt you will find the sum based on this schedule 3 and in the cash flow statement. Are you able to understand? Once you've done this now, almost your 20 marks is done. 20 marks will be in your back pocket. Are you able to understand? Yes or no? So after the break, we are going to resume again, my dear student. Have a short break. Lunch break, how many times you need? How many minutes? So 45 minutes, okay na? For lunch break? Yes or no? So please have lunch and come back. We'll start our class at 1:45. Is it clear? Yes or no? So we'll meet again at 1:45, right? After that, we'll start the solving the sums. Till 3 o'clock, we'll solve the sum, and thereafter we'll start with the cash flow statement. Very beautiful accounting standard, and there is a chapter also. Is that clear? Yes or no? So we'll meet after the break. Thank you so much, my dear student. Thank you, online students.